BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Andy, why is everyone bullish ETH all of a sudden?
We're so back, it's so over. We're so back, it's so over. We're so back, it's so over. It is so over. We're so back, it's so over. We're so back, it's so over. Bart is back.
Bart is
Who likes the Simpsons? Bart is back. If you like the Simpsons, Bart is back. Bart is back. Welcome to 2018 Comrades of Crypto Twitter.
I miss the Barts.
Yeah, it's fucking golden. God damn. The hell's going on?
All the market
there,
makers got
man?
liquidated. So now we end up with Simpson Bart. Bart's the only market maker left in town.
Wow.
Man, it's almost like when this is what breeds disbelief, because now you get the sense of when it goes up and it just goes sideways and it prepares for a Bart, you have ultimate disbelief. You can't fathom. You know it's going to Bart down every single time until it's the boy who cried wolf.
I'm choosing to be a
That
cockroach.
is probably the right choice. Cockroaching has got us this far. But I will say, despite terrible sentiment across the board, people are bullish ETH. Have you seen this?
Yeah.
The bullish
Which one?
ETH complex.
I have. I think there's actually yeah, well, let's talk about it. Let's get some content up on the screen, and let's talk about what's happening in the market a bit. So yeah, so I think bullish ETH is kind of related to what you're saying. But I think this is what's important.
Coinbase
Rob, is what's in front
institutional
of us.
speculative excess has been flushed out. We saw retail get flushed out during 1010. Our systemic leverage ratio, which tracks purely speculative positioning, has stabilized at about 4% to 5% of total market cap, down from 10% this summer. Lower leverage equals healthier market structure. So why are we seeing Barts and less vulnerability to sharp drawdowns heading into year end?
I think we're seeing Barts because 1010 absolutely
lower
cooked
leverage
market
equals
makers.
healthier market structure. You're saying Barts are healthier market structure?
I'm saying I think that 1010 cooked a lot of market makers.
I think 1010 cooked retail.
That's what I'm saying.
Yeah, I don't think too many institutional market makers bailed out on 1010.
I think a lot
of retail got hurt, and I think we're no longer seeing the acceleration take place on either of these moves, up or down. I think we're seeing a crab market. It's pretty much sideways and range bound. And I think we're going to see an institutional bid.
Yeah. Okay.
And I think that's what we're seeing here. And there's another tweet, actually. I don't know if we have it, but you brought it up yesterday on the stream, which was that smart money or institutional money bought something like 2.5.
Oh, yeah. Dude,
Right.
That's a crazy one. I'll get that one up. But yeah, it's basically that like the whales are selling and the whales are buying and the retail is selling.
I think that's what is happening still. I think that is what happened on 10/10. I think retail was forced sellers. Maybe I'm sure there was some smaller market makers that got carried out. But yeah, I do think what we're seeing is that retail is essentially washed. They're either trying to do leverage trading or they're trying to make it on alts, both of which are a recipe for disaster. And the cockroaches are the institutions.
The altcoin complex. I like the altcoin complex, by the way.
The cockroaches are the institutions. These are not guys that are trading on incredible leverage, and these are not guys that are dipping into the high-risk altcoin markets. These are guys that know what they're doing, and they're built to stick around. And we've seen that, and we know the assets that they're planning on bidding, and we know how they're planning on bidding. They're not going to use leverage. They're going to systemically bid these major coins. Bitcoin, ETH, things with revenue, things with real business models. Those are the things that are anticipatory of the next wave. I mean, we saw it. We were in New York. We saw the institutional cycle take place.
We did. It is a super cycle happening, and it is literally.
It is. And so I think we have to recognize which assets are positioned to benefit the most from the type of institutional capital that we anticipate to come into the space. We've already seen it come into the space. The most incredible statistic of 2025 is that BlackRock, highest line item on its revenue balance sheet is IBIT. Is Bitcoin ETFs and crypto ETFs are the hot.
Rob, tell him.
Do you not find that like incredible that like these ETFs, the product that is 1 to 2 years old for an 80 to 100-year-old company, the product that they launched less than 2 years ago is their highest revenue producing product? I find that incredible. And it signals to me that this is something that they're going to really, really load into. And they're not going to like see this as a flash in the pan. No, if this is something that is making them money, something that's a century old, they're going to try to build up this product so that it lasts for another century and they can continue making money. I just think there's no reason to overthink it. I think if you look at what is happening, you see the people who are in power with control over the money printer, essentially. You know how this game goes.
Yeah.
I mean, you don't see like the president's family buying Bitcoin and then think, oh, I'm going to fade that. No, like these are guys that have the ability to like create their own success. They have the institutional partnerships. They have the networking relationships. I think the major coins are the ones that are poised to do really well.
I do agree with you, but
confused.
Yeah. So here's kind of like the important take here. That is, whales are loading up on ETH, retail selling. Whales are loading up on 934,000 ETH, about $3 billion over the past 3 weeks, while retail dumped 1,000 ETH.
Yeah. So
make this make sense. Make it make sense.
I think the most important thing is the delta in time horizons between retail and institutional. Institutional has the bias towards patience. They have an edge in patience because they're not strapped for cash. Institutions are good. They're fine. They've been around a long time. They're super lindy. They'll continue to be around a long time. They're thinking in terms of decades. Retail is thinking in terms of like making, and you see it on crypto Twitter. It's like, I was told there was a Santa rally. My girlfriend wants to go on vacation. I need to make money now. to go and afford a vacation.
I saw that tweet. It was pretty funny.
There's so many memes about this. And this is the sentiment. Retail needs to make money now. They're trying to find a 10x. Meanwhile, there was a 10x that happened, like a natural organic 10x that happened in the market. It was an AI coin called Pippin.
I saw that.
Which is incredible. That's maybe a different conversation. So there is secular bull trends that are out there. You can like find these diamonds in the rough. And I think you probably have a better chance at making it like that. But again, that is gambling. If you don't have an edge, if you really do your research, you can probably get a pretty good edge in the altcoin markets that are deep, deep, deep down. But it's like finding a needle in a haystack. Yeah. The alternative is leverage trading, which is just the same as going to a casino.
Okay, so here's my take on this though. Like, I get that we're in a perma bull super cycle, but like, there's nothing stopping this market from pulling back to like I've said, to lower levels first. And like that drawdown is gnarly, and I do not really want to be a part of that. You know what I mean? And so like, I don't know, man. If we do get a gnarly drawdown in December into Jan, like, oof, like that will ruin your holidays. I'm taking a breather. I'm on a breather vibe. I'm happy to be on a breather. I'm chilling. Still very exposed, comfy though.
Look, that sounds very cozy.
Yes.
And I think it makes sense.
Yes.
I think about this maybe two different ways.
Yes.
One is, like you said, time horizon, event horizon. I'd be curious to get your perspective on this as well. Is that, look, December, January, maybe we go down. Maybe we go all the way down to 75K, maybe even in the 60s, right? And ETH, breaks 3K, maybe breaks 2,500, maybe lower.
Yes.
Hypothetically, that happens first half of Q1, January, maybe even February, right?
Yes.
Imagine this, right? Trump announces new Fed chair and we pump to all-time highs. Bitcoin 150 from 75.
Yes.
ETH to 5K.
And that could happen this month.
That could happen this month, but just playing out this hypothetical, right? Let's say we dump this month, we dump into January. February comes, they make the new Fed announcement, and then we rocket to all-time highs, right? Like, the beginning of Q2.
Yeah.
If you looked from now and then you looked at the beginning of Q2, right? You went into a coma for Q1.
Yeah.
You would wake up and you would see Bitcoin and ETH at all-time highs. It'd be like, oh, great, right? But what is happening in between is this downside. And so I think the patience to withstand that is one way of looking at the market, right?
Yes, but it's also just like personal portfolio allocations. People don't understand this. Nobody on crypto Twitter understands your personal portfolio better than you.
Correct.
And so you have to be the one who's able to navigate that. So guys, let's hop off this tweet. We'll get ready for our boy Mando. He's coming in. And yeah, he's co-founder of Yeet. We'll get his take. I know he's got a lot of takes, and yeah, should be a good one.
Oh yeah.
Market does not look good after FOMC, though, I'll tell you that. ETH down 5%.
I think it's too early. Like this FOMC thing is always like, it takes some time to play out before you can really look at price action.
Yeah. Yeah.
All right, I think we got Mando in the back. Let's bring him up.
Yeah, man. We'll just continue this conversation speculating over where the price is going to go in the next tick. In the next 1 second chart. Mando, what's up, man?
Hey guys, how you doing?
Good.
Pretty well, man.
Welcome to the show.
Pretty well. I saw your boy Farouk just dropped a Tom Lee episode. That guy is the biggest ETH bull I think I've ever seen in my life.
Yeah, I think he's still calling for like 200K Bitcoin by year end. He said he's going to giga pump to 50K by year end.
Oh man. So he's got this private newsletter thing or a private webinar group. And I remember back in August, I was hanging out with some friends and we were watching it, and he was so certain on 16K by the end of the year. Unfortunately, it's not going to happen. But ETH is showing
for ETH.
Yeah, exactly. ETH is showing some strength against Bitcoin though for the first time in a while. It's good to see. What's your read out there, man? How are you positioned? How are you thinking about things?
I don't want to rain on people's parade, but I have been a little bit more cautious since we kind of broke down below 100K. I've definitely felt as though I was very bullish. I was the idea that we were decorrelated from gold, from Bitcoin, from stocks, and you had all this money coming in from the ETFs and the DATs. It just felt like, what is going on here? And we just keep on going lower, and that correlation just never really came back. And I'm just kind of like respecting the market a little bit here. I just don't know if we're immediately going to just rip back and get those sort of bull market expectations here. I think we could be in for a bit of a chop down. I don't know if we're going to, like, this is some like a cycle top or anything like that, but I do think we're going to have at least one more test of 80K or around that sort of region before we work out if that's going to be a strong bottom with which we're going to rally off. So for now, I'm just a little bit more cautious. I think the stock market, at least tech stocks, look like they may have done a little bit of a double top if you bring up like the NASDAQ, and I just think, yeah, it's not a market to be that aggressive, let's say, in your positioning.
Yeah, it's a bit unpredictable. And, you know, we've kind of been looking at this a couple different ways. There's, you know, potential catalysts, right? Like there's this new Fed chair. We just had the FOMC. You can kind of expect that when this comes out, you know, maybe that's a catalyst. And then you've got institutional, both buying and selling. And then, you know, on the other side, we've got, you know, a technical analysis perspective that says, look, like the yearly opened at like 93.5, right?
Yeah, it's right on the year. It's crazy.
It's right on the year. And so I think, you know, from my perspective, it's like, okay, are we going to finish above or below the end of the year? And usually these things tend to be really interesting because it usually makes a run at it or a play at whatever that yearly bar is. And I don't know, like if you pull up a yearly chart, which I don't do very often, but at the end of the year, it's kind of nice to watch. It's a doji, right? That's a candle pattern where it's just a huge wick. And it's like that little sliver of a candle bar. And it's a matter of, is that thing going to turn green or red? So, man, are you more of a technical analysis guy or a fundamentals guy?
I mean, I guess I'm a lot more of the fundamentals, but I do think that level of around 93 to 94K, we've touched it about 3 or 4 times, and we keep on being rejected around that sort of level. So I do think it's important. I think there are big algo style funds which look at this sort of stuff. So, for example, we had that dump on like the 1st of December, just after midnight, and that was, to me, that was very clearly just like monthly algos being like, right, we sell because it looks like a trend is broken. I think similarly that could be important for some of these algo trading style funds that are trading on Bitcoin. I think that will continue to be an area of supply, like you just said. And I think even if you're bullish, I think you need to see that like retest to be like, right, this is going to be what we really bounce off. Otherwise, like, I don't really think like, yeah, we rallied to 100K. Does that really help you? That would look like a lower high and then a little bit of a worrying kind of like, it would be the same setup almost. Like, I think we need to form a really strong bottom here. So I do think we're gonna get that, and I don't think it's a bad thing, basically. But I also don't think we're gonna go below 80K by the end of this year. I think we could touch it, and then very similarly, we could have a run at 93 to 94K, and who knows where we end up on the yearly. So I think if I zoom out, I'm not like that thrilled about the opportunity set right now, because what I'm telling you is the upside I think is like 100K and the downside is like 75K, and that's like 8% versus, or like 10% versus 15% kind of
pretty much a coin flip. Yeah,
like
the risk reward is like basically 1-to-1. There's really not much edge either way.
I want Tom Lee saying we're going to go to 16K on ETH. It feels as though we're not there right now. It feels like we're in this sort of, we're just hoping that it isn't over.
Right. Yeah, that's not a good place to be.
And the bulls are like, I think we can get above the yearly at 93.5K. It's like,
it's not exactly the most promising.
Well, I just think that sometimes in these sort of markets, you can get really bored. And you can be like, right, because we, as you know, everyone tunes in every day to see what the hell happens on CT, although it has gotten a bit quieter recently. And sometimes that can be really dangerous over these periods, because you make a big deal over actually pretty
over nothing.
Boring price action.
Yeah, Mando, how do you rationalize this? Like, what do you do for fun? Like, how do you keep busy? What do you do with your time? Like, when,
I got a
in a
family,
really
dude.
boring.
There you go. There
I'm
we
a
go.
different stage of my life, I think, to you. Like I've got an unbelievable amount of stuff to do, and then obviously I've got the businesses that we do. So
Of course.
I've got Yeet, and I've got Rect, and I've got all the podcasts and newsletters.
So in more neutral, maybe boring market conditions, you find yourself orienting more around businesses and growing and this sort of thing, rather than trading the
Same
market.
for you guys, surely, right? Like one thing that's what got me through the last
100%
bear market. It was like I knew I was turning up each day and just like having some fun with my friends. And you have this idea that you're building a fun business, and you guys have obviously built a great little platform here. So I think it's like the best thing to do. They always say that like bear markets or quiet markets for builders. It is true. Like the only people that stick around and are engaged are the people still building stuff every single day. So, and that could be media too, although the stories get a little bit quieter. In terms of markets, if you're looking for markets that are breaking out, like I said, this AI trade obviously looks like it's a little bit more precarious now, just because of that Oracle earnings but this whole idea like the world is collapsing and you need to own hard assets, I think is still like a trade. We've seen like some of the precious metals continuing to hit all-time highs. It's just been surprising that Bitcoin hasn't been part of that. So I still think you can have that top-down view on the world and get involved in some of those markets, but it's boring for me too. It is a little bit. You have to just stick to your guns that you shouldn't be big and you shouldn't be like. A lot of people lose quite a bit before this sort of period, and then they go, right, it's going to have the same opportunity set for me to make it back, and actually the opportunity set to make it back might not be for 6 months.
Totally. I totally hear you. I'd like to get your take on some of the culture stuff as of recent. I think, you and the Rec guys and, your kind of main group that you guys have built over the last couple of years is very in tune with a lot of the culture stuff. I saw a clip from yesterday's show with Thread about how articles are like this, like just written by other authors so they can praise each other and kind of circle jerk each other. I thought that was pretty funny and accurate. Also have not really found myself reading articles on CT for a long time. Maybe that's the attention span question. Maybe that's just because I just do so much podcasting. But the evolution of this space has really happened, right? And you've been around for at least 5 years or so, and you've seen it. And I think the driving force this time has been just like this institutional capital allocation has made people feel a bit more apathetic towards like their chance to make it in the space. The altcoin market, obviously, like the altcoin complex has been decimated. So that's really gotten to people's heads. You also have this kind of like AI gonna make the world meaningless. We got to get rich now complex happening more broadly outside of crypto and inside. And then you've got like the crime cycle of all these founders doing all this crazy stuff this cycle. So there's a lot of like these factors that have really changed crypto's culture. I guess 30,000 foot view. How do you think about this right now in terms of where we are at in the culture and where we go from here, as far as some of like the core ideologies or just the way that the community shapes up, etc.?
Yeah, I guess whatever cycle you joined, you have like rose-tinted spectacles about it, and you're like, that was the best cycle. But I joined during the NFT boom, right? And maybe just before that. And I remember thinking at that time, it was a really interesting time to be involved in crypto. You suddenly had all these finance people, all these like libertarians, and all these like art and culture people all coming in at the same time. And there was a lot of larpiness, but like it really did feel like, wow, like this is kind of cool to see all these different people come in. I have to say this cycle has kind of felt more like we're an extension of the banking system. And that's permeated through to everything, like for like from the media to the conferences to the main KOLs. Like it feels a bit more like that. And I think there has been a little bit of a reaction to that, though. Like there was this whole thing like we really want the institutions to come, governments to come, and then now it started to be a bit more like, well, we've lost a bit of the essence of why we're here. And I think, at least in the last couple of months or a few months, with the whole privacy narrative coming back, and also just the general sense that maybe we've gone a bit too corporate in embracing governments, let's say, and TradFi that we're gonna wrestle it back a little bit. I hope that it keeps that sort of element to it as well. Like, I do think it was a little bit weird to see like how many Bitcoin OGs were like, just, I can't wait to see how much the US government owns Bitcoin and how much we can get into a DAT on the NASDAQ. It all just felt a little bit like maybe we'd lost sight of why a lot of people got in there in the first place. And I think it's is because a lot of that is kind of blown up slightly, or maybe not has been as great as people thought it would be. I think people are now starting to realize, okay, actually, no, we can be our own thing again. So I would like to see that sort of counterculture come back to crypto a little bit, that sort of like renegade atmosphere to it. And I think we will see stuff around that.
Mando, can I ask you what your best trade ever has been?
Best trade ever?
Yeah, what's been your best investment of your entire career? Crypto or non-crypto? And it could just be the equity that you've built in Yeet and in Rect.
I've had a few in crypto, which have probably been my best trades. So one night when I first got into crypto was NFTs, right? So yep. And that journey, in January of 2021, I was like, I wanted to invest. I was investing in art and wine and whiskey at the time. And I was like, I found out about crypto art. And at that time, I invested in 15 one-of-ones from like top artists. So like X Copies, Hackatow, Coldy, all these like OGs. And I remember thinking I'm going to own them for like 5 years, 10 years, and maybe they go up like the normal art market. They go up like 10% a year or something like that. And then within a month or two, that bag just like 5x'd. 10x. I remember I bought a piece for 15K and sold it for 230K in less than a month. It was just like, it was wild that sort of time. And then later that year, I then used the profits from that to buy one night, emptied my savings account, my wife's savings account, and bought 89 Bored Apes in one night at 2 to 3 ETH. And so that was an investment of around 600K. And we exited that for about $20 million all in.
Bro, what?
Whole cycle, yeah.
Dude,
Wow.
What gave you the confidence to put 600K, empty your savings account into Bored Apes at 2 to 3 ETH?
It was in an ISA. We have ISAs in the UK, which is like tax-free. And it was only like, at the time, rates were low. And I was like, this is going to 3x. I thought that this is before, I mean, if you know anything about NFTs, I thought, hey, they're going to do the mutants. This thing is going to do a 3x. I think this is like an all-in sort of trade. So I just bought them all. And then they just kept on going higher, and they kept on going higher. And then by the end of that year, they were starting talking about the coin. And then the coin came the next year, and we sold the coin. At that time, obviously, then I created a fund with OSF, but we sold all the coin for about 8 or 9. And then we sold all the NFTs to Matchy Big Brother in one clip on Blur during the Blur farming days. So we sold all 72 of them, and then we had all the land and all the mutants and coders and all this sort of stuff. So all in, it was around $19 to $20 million. Yeah. So that was a big trade, and then actually we turned around and me and Ovi bought $1 trillion of Pepe very early on. So me and him both were very early to Pepe when that became big. So that was a very big trade for us. And then since then, I've just kind of been a big perp trader. So yeah, it's been a good, crypto's been good.
Dude, awesome. That's incredible, man. I remember being so active in DeFi, like DeFi summer yield farming, and then seeing NFTs, and I had ran up the, a good ETH stack at that point. And I was like, there's no way I'm going to give my ETH to the freaking NFTs. Pretty big fumble. I did pretty well in 2020 to 21, but could have been like generational. So props to you for seeing that and moving on that. Similar question, kind of back to the fundamentals question with regards to how the culture has evolved. What have been some of your biggest breakthroughs on Rect or Yeet or FOMO Hour? How did you go, what were some, either a story or a moment or a lesson, something that you can share with us that has led to your success in building these brands? I think it's a different kind of, speculative element than trading, but it's also still kind of speculative, and it's a journey in of itself. what were some of the biggest wins that you guys had there, and or just like breakthroughs or learnings that you can share with us?
Building a business in crypto has never been as easy, actually. Like the trading side of stuff, I've been a trader all my life. So like that sort of stuff came naturally. Building a business in crypto is very difficult, particularly ones with tokens attached to them. Like it's very difficult to keep the prices high, very difficult to keep the community engaged. With Rec Guy was actually like almost a response to a project that we'd done before, which didn't actually go that well. And then we did Rec Guy and we did it all for free. That's all been for free since the start. So the NFT was free, the coin's been free, the equity was free, everything's been done that sort of way. Almost because it was so difficult once you start selling things in crypto that like they own you like very, very quickly. So it's always been, it's always been a little bit difficult from that perspective. I don't know what the big wins. I think sticking around, people like to see that you're genuine and that you are. Crypto volatility and the idea that everything feels over is a feature, not a bug for crypto. So like the people that stick around and continue to give face time and show leadership, particularly for projects, but even just in terms of media during that time and build a platform during that time, it does really become very fruitful. We did the podcast. I quit my job in 2021, at the end of 2021, and we started doing the podcast. And about 5 months after I quit my job, the price of ETH had dropped like 80%, and I was like, "Oh God, this is this is going to be tough." And building that platform was like a really valuable thing. I think everyone's kind of done it now with the Kaito era, but building a platform for yourself in this space, I think, can lead to just so many different opportunities. Yeah, people look at the small stuff often, which is like, oh, I got a sponsorship for this, the Kaito style stuff, or I got a paid tweet. We saw that and said, actually, we're going to build businesses off the back of it. So we've built Rect, we've built Yeet, and arguably those will end up being much bigger than any trade or anything that we ever did apart from that. So I think the real thing is using platforms that you do, not to just build a better X profile, but to build a business or a product.
Yeah, that's incredible advice. And I think Andy and I realized that early on as well, and started our entrepreneurial journey in this space. Man, if you don't mind, I'd love to just circle back, because the question comes to mind again on the emptying, you and your wife's savings accounts to buy Bored Apes at 2 to 3 ETH. What was your wife's reaction when you told her that you were going to empty her savings account to go all in on Bored Apes?
She just trusts me with this sort of trading stuff. She still isn't really quite cognizant of like what all this sort of stuff was at the time. I was like, look, I think this is a really good trade. I think I can make a lot from it. I remember, it's quite a funny story, because I was working as a trader at the time. So I would go to work, and then when the mutants came out, I was like, said to her, look, you're going to have to sell some of these, because I think they're going to dip after the mutants. So she at one stage was selling some of them on OpenSea for me while I was at work, and I was like directing her to do it. And we sold like 10 of them, and I was like, actually, these are going higher. Don't sell any more. So she was kind of semi-involved at the time. But then, look, I just have a lot of conviction sometimes in some of these sort of trades. I think I spoke about it even yesterday on Fred Guy's stream, but there is that good Stan Druckenmiller quote, which is, it's not about whether you're right or wrong, it's how much you make when you're right and how much you lose when you're wrong. And if you have if you think you really like a trade, you should try and make as much money from it as possible, particularly if you have a very high conviction. And I think that you have to be honest with yourself and say those sort of things only come up like once a year. But when they come up, you've got to make sure that you're going to make a lot of money from asymmetrical bets. So my view is that they were going to 3 to 5x. And why wouldn't I put as much capital as possible into that trade? Now, I had a job at the time, so like I could, and I had money and I'd had some good trades before that. But I'm definitely of the view that if that one time of the year happens, you're like, this is going to happen. This is going to 3 to 5x. Had a similar sort of feeling around Zcash recently. I was like, there's no way this is going lower, when it was like 100, 150. I was like, there's too many people suddenly behind this. I think you can really trust yourself. So yeah, I'm a big believer in high conviction, concentrated bets.
Yeah. Yeah, no, I think that's, I mean, it's funny how everything in crypto kind of moves together anyways. So, distributing out your portfolio is actually kind of silly in some sense. Let's talk bit more about Yeet, man. Um, you guys have been kind of building out this kind of on-chain, gaming kind of arcade, kind of like mix of like prediction markets, betting, gaming, like kind of like very UK oriented. There's a lot of lossless lotteries in the UK. There's a cool culture there around it. I've got a bunch of buddies from Bristol and Manchester and such, and
Really?
they talk about it. So,
Yeah,
very
I mean,
spectrum.
gambling culture in the UK is like you grow up gambling. You grow up. Sports betting's been with us for forever, and it's very ingrained in the culture. Like I remember the first bet I ever put on was on like the Grand National, which is like a very famous horse race out there, and everyone in the country would put one on. You know what I mean? It's not like it's very, and football ingrained with football as well. But yeah, Yeet was a project we started getting sponsored actually by, and this is a good idea for you guys. We started getting sponsored by crypto casinos early in our time doing the sort of podcast.
Yeah.
And we had to look at those businesses and we were like, why don't we create one of these, like a sports book? And that was perhaps a little simplified because then it took an absolute age to build and we built it all from the ground up. But we've been open for 7 or 8 months now. We've just done $1.1 billion of volume. It's from people that you kind of know and have heard of in the space. We have Ben Lamb, who's a professional poker player. It's Keyboard Monkey. It's myself, and a bunch of kind of that kind of related to the rec community, but similar sort of people. And yeah, the idea was to be slightly different, like a bit more led by like crypto natives. Stake, for example, like absolutely massive, probably the biggest online casino in the world, and I don't see them anywhere on crypto Twitter. I don't know anyone who's sponsored by Stake. And a lot of the other ones kind of came from gaming or CSGO and kind of came in and tried to do that. So we were like, right, we'll build one. It fits with our content anyway, because we're risk takers and KBM's been a big sports bettor for a while. And then, yeah, we've built it out from there. But I do think that I'm a big believer in, this is going to be a massive trend in society. You can already see this with prediction markets, right? Like the world is trending this sort of way, and we want to go into all of this sort of stuff. So I think we're going to move horizontally, but yeah, go check out the platform. I know we're sponsoring you guys. The great thing about this as well is that I guess I get to just sponsor all the
shows that you like. Yeah.
It was like very easy. I was like, right, okay. And that's often where I felt like a lot of these other guys who came in here got it wrong. They would sponsor like known scammers or ruggers, and then they would be
BitBoy was sponsored by Stake in the chat.
Yeah, exactly to your point. And I was like,
comes in handy. That's
no one wants
hilarious,
to.
dude.
That's the wrong move. So the idea was that we want to. Because everyone knows us, we want to have people that we would also really want to respect and trust with it. So it's great. I've been able to help support a bunch of different shows in the space, and you guys have soared, it feels like, this year as well. So congrats to you guys.
Yeah, appreciate it, man.
Appreciate you saying that, man. It's been a fun ride. We're not going anywhere.
I saw you guys in Argentina. How was that? How was the vibe?
It was great.
I mean, builders are always so completely insensitive to price action, and they're just like so deep in the trenches. Good times in chat. Yeah. So yeah, I mean, it was good. It was fun. And I think that the Ethereum community is experiencing a revival in a way, which I think is really good to see from the foundation level. So that's cool. We kind of got our roots into Ethereum, but have since kind of like moved away from just Ethereum content. There's a lot out there. So,
yeah. Also, being in Argentina, it felt like crypto was important for a reason beyond speculation. Like they have faced hyperinflation for so many years that this was truly a way out. And we heard stories of people relying on crypto to help themselves and their families. So it gave like kind of an extra layer to why we're really doing this. And found that really meaningful.
Yeah.
Yeah, it's interesting that I remember speaking to somebody else about that, just from a business perspective, and he was like, "Oh, why is South America such a big deal?" And I was like, "Well, often crypto is like a lifeline to so many countries that have had failed failed currencies for like many, many years. So it's true. Argentina, I remember speaking to somebody about all the different countries in Latin America when it comes to crypto, and it's like Argentina is just the biggest. Like they are far and away the biggest, even though they may not be the biggest economy. Like they're just so huge because of the currencies has been such a disaster. But I agree with what you said there as well. It does feel like ETH's having a bit of a revival right now, which is cool to see. One thing about ETH, it gets a lot of flack, but it has staying power. It feels like, and that can be worth a lot. I think there is this big debate now about the value accrual back to L1s.
Yep.
And are these all inflated? And we had that. There was a bit of a public debate about that recently. And I do think that L1s always have to have in their mind that they're a currency rather than the fees. And I think ETH has had that in its mind far more than some of the other high throughput L1s. It's always been like, right, it kind of has lower inflation than Bitcoin right at the moment.
Yeah. It just depends on the fees. But I think you're right. I think all the Sols, Suis, IP, Aptos, all these are going to be looked at by institutional investors. Like, okay, what is, Santi's whole like proof of, or, PE ratio, PS ratio, that's going to apply to all these other L1s. And right now, they don't have a lot to show for it. And L2s, just any chain in general, I think, honestly.
Yeah. It's difficult to attribute monetary premium to the alternative L1s.
But ETH has kind of got it now.
ETH has it, and I think
I
think the reason ETH has it is because of DeFi. I think ETH is used as collateral, and that's what gives it monetary premium. And it's collateral in DeFi markets for the most part, and even starting to become collateral in some regulated markets. I think whether it's Paul Atkins or one of the regulators in America recently said that they'll start to use crypto as collateral in derivatives markets on regulated exchanges, which I think will help the monetary view and perception of and premium of ETH, but not other L1s. I don't think other L1s are gonna find themselves as collateral in as many places.
Yeah, I think that's true. I just think that also just what you define your chain about should always, at the end of the day, like people talk about for the apps, it's always about how much you buying back. Like what's the multiple of that. For a L1 currency, it should really be about emissions versus, let's say, burn by one of these sort of gas burns. And ETH is the best at that. It's actually the best out of any chain, apart from Hyperliquid. There's big debate about whether that's more like an app or a chain at this stage. But it does feel like it has long-term value. The compounding effect of 3 to 5% inflation versus 0.3 is huge, absolutely massive.
So you don't hold much Bitcoin, it sounds like.
I hold a lot of Bitcoin. Is still my trade, but right now I don't hold. I'm a bit more bearish, honestly, man. I think the market could be headed a little bit low.
Thank you. Somebody who agrees with my perspective. I've just been butting heads here with Robbie for the last 2 weeks. We had the framework guys on yesterday, and I
threw Andy under the bus.
I got
the framework guys they were bullish. I'm bullish. I got a fuck you higher hat up here. Here, why don't we?
Let's see this. Put it on.
I just think like it's fair to be bullish for like end of the year, next year or something like that, but it's hard to see it right now, man. It is hard. Like Sol looks ready for freaking.
Sol looks like it's going to Goblin Town to me.
Sol looks ready for under 100.
I think Bitcoin, ETH are really we already tapped 80K. I don't think we get that much lower, but I could see us hanging out around there. And then I do think there's going to be some catalysts that are going to send us a bit higher. But look, we've already been in this bear market, if you could even call it that, for 3 months, right? Yeah. So it's like, at what point does this become a bear market, right? Is it a price depreciation or is it a length of time? Everyone's got different time horizons.
Yeah. What if it already is a bear market? Yeah.
Well, then I think you're closer to the bottom than otherwise, because then it's like, well, if we've already had the most of the bear market, the time to sell was 3 months ago. Now would be the time to buy, as we kind of like round out the bottom of the bear market and, start the new cycle.
As a trader, I'm like, I just have to have the discipline around it. And like I was sounding just like you up until we broke below this 50-week moving average. And then I'm just like, you know what? I'm not going to keep on doing this. I'm just going to respect it now. So if we go above 100K and we sustained, then we're back to it. But where's Bitcoin's like 92K? Like, I don't need to like risk it. You know what I mean? I don't need to risk
I agree
it
completely.
80%. Like I might as well just wait to see.
I completely agree. And the drawdown is just not worth it. The drawdown is not worth it on the
Mando,
mental.
let me ask you. You know, you mentioned that obviously did extremely well in the NFT era, and then now you're on perps. But I'd imagine you also hold some spot. Are you moving your spot around in these mid to near term fluctuations?
I sold a lot of Bitcoin when we dropped below 100K. Yeah, so I did sell. Having thought that this 4-year cycle was going to extend, and that we were going to have a very strong period. And I held it that was the whole period from 125 to 100. I was like, no, this is going to be held. This is going to be held. And then it wasn't. So I am slightly talking my own book. Maybe like mentally, I'm like, I don't, only if it goes back above that level, I get back in. But I also just think that as Andy's saying, like the mentality about it, like you've got to have your own lines in the sand sometimes, or they can be really painful. I think what I do think of this sort of market, as we just kind of saw with Zcash too, is that you can get like unbelievable runners during periods like this, because the amount of money coming into crypto is kind of neutral, but some of these stuff can when it's just all of us still here and we're like chasing that one thing that's outperforming, everyone throws their money at it, because everyone on these sort of shows is the only thing to talk about. It's like, oh, what we're going to talk about is the one runner that happened and everyone else is down. So I do think those ones can move unbelievably during these sort of periods. And Zcash is having another like run right now.
Yeah.
And you kind of, sometimes it's like that, like one coin is doing really well and everything else is just getting fucking decimated. I think we could see a bit more of those. So like, it's not that I don't want to, I think you can keep your powder somewhat dry also for those sort of trades. But if I was to rate the market right now, I just don't think.
And it's a very different strategy between perps and taking some of those swing trades versus spot and portfolio management. Mando, appreciate you, man. Absolute pleasure. Thank you for sponsoring the show. You guys are doing great work. You're a legend in the game, and appreciate you coming on as always.
I'd love to come on more. Yeah, whenever. Great to see you guys, and keep up.
You too. Merry Christmas, man.
Merry Christmas, guys.
Thanks, sir.
We'll see you next time.
Happy holidays. Cheers, man. Peace. All right. Well, good to know that somebody's also thinking the same way as old boy here. So good to hear that. He probably sold a little bit higher than I did as far as the majority, but yeah, man.
20 million on board.
It's the state of affairs.
Insane trade.
Insane number. Yeah,
that is incredible. Number. That is so.
Can't believe that happened. Yeah, 20 mil on Bored Apes is pretty insane. So I totally agree. All right, guys, we got Shriram and Andrea. They are working on some really interesting verifiable AI. I just had a really good show with Teng Yan, a ex-Delphi researcher today about AI. It was a really good chat. So excited to have Shriram and Andrea up on the show. It's been a little bit of time since the last one, so let's get the boys up and we will get started talking about what they're doing together, as well as just some general updates on the state of affairs. Rob, did you try Near's private AI chat?
Yeah, I have. It's pretty cool. You can choose from a few different models. They're all open source models.
It feels cool, man. It feels cool to like write anything in there and know that like cryptographically you're private and no authority can get access to it. No entity is going to use it to train against you. It's pretty freaking cool, man.
Especially as you see what's happening outside of the private AI space. And you see like, okay, they're going to start sponsoring advertisements. They're going to, basically sell your chat history to advertisers so that they can target you with advertisements. The black box is just a deep, deep hole, black hole. And I think it's really, really important that we have alternatives. Near is doing incredible things in the private AI space. We have seen their chat product. Everyone can check that out at near.ai. And then, we've got Sriram here who's gonna tell us even more about how EigenLayer is helping verifiability and AI, and how, again, we can help to unveil what's happening inside of these black boxes so that we can understand exactly what is being done with our chat history, what is happening with our data. And I think ultimately this is going to lead to a renaissance in the AI space.
Let's do it.
Let's
get him up here, guys.
What is possible with these AI models?
Here we go.
Here we go. What's up, guys?
Hey, guys. Great to be here.
Andrea, good to see you. Andrea, it was good to see you in Buenos Aires. Thanks for coming to the event.
Yes.
It was fun.
Thank you for organizing that amazing event. It was
a
definitely
good
one
time.
of the best ones. And the food was really good.
Yes, yes.
Granted, we weren't in Buenos Aires, but still, it was a really classy event. So thanks for inviting me.
Yeah, man. No worries.
Looking forward to the next one.
Sriram, good to see you as well, man. I know you've been quite busy. A lot going on in the AI world. How's things holding up there?
I love it. Well, I think it's interesting that you guys are on here together, because EigenLayer obviously has done incredible things in the AI space with Eigen Cloud, and now Andrea, coming from the story, the IP side of things, this feels like a match made in heaven. Maybe you guys can talk about more, why exactly this is a good fit.
Yeah. Sriram, I can give my version, and then I'd love to hear your version. Yeah, so it kind of all started pretty organically. I was tweeting and ranting. Sometimes they overlap. Often they overlap. And I was just using, ChatGPT, and I asked ChatGPT to give me information on on how it was trained for a specific topic. In this case, I chose the most random topic possible, which was the Navier-Stokes existence and smoothness problem. And because I wanted something that was specific enough that there weren't like 1,000 sources for it. And I asked ChatGPT to give me what list of documents did you use to train on this, right? Like, how can I verify that you know this topic? And it just responded with the generic answer, oh, I can't. I can give you information about this problem, but I can't give you any data set IDs, document lists, file names, URLs, the usual filter, right? And yeah, I just felt kind of and that kind of was the inception in my mind of like, okay, this doesn't have to be the case. The black box doesn't necessarily have to be the case. And this is also what you were talking about earlier in the stream, right? Like private AI and so like I was thinking, okay, well, there's different stack training data that goes into a model. There's the model, and then there's the inference that comes out of a model, right? And these are like the three main life cycles of AI in a way. So how do you train the model with what? And then what do you output from the model and how? And if you think about it, when you use Anthropic ChatGPT today, you have no guarantee that the prompt that you write is actually the prompt that hits the model. And you don't even have a guarantee what model is being hit, right? Because they're abstracting it more and more away behind the scenes. And so, Eigen is fixing exactly that on the model and compute and inference side with Eigen Cloud and Eigen AI. And Stories is doing attribution and just verifiability on training data, and we can get more into it later. And I was like, well, this seems like all three pieces starting to fit together. And I just, and when I tweeted that, Sriram reached out, and it was, let's work on this together. And we just published a piece this morning around end-to-end verifiable intelligence, and we can dive into it if we want later. But yeah, I'll hand it over to Sriram to kind of give his take too.
Yeah, super excited about this collaboration on verifiable intelligence. So what we had been doing at Eigen is, we think of, like, when you look at the cloud today, you have mostly people use it for data, for compute, and for inference, right? How do you make all of these things verifiable? If your data is verifiable, if your compute is verifiable, your inference is verifiable, you can build very powerful verifiable agents. And you need trust and verifiability when your agents are not doing something lightweight, when they're doing something important, right? They're taking actions, they're moving your money, they're like, paying out for people who contributed to it, and so on. So whenever there is consequential like actions, is not as simple as a chatbot, you want verifiability and trust baked into the stack. And the thing that so if that's the high level context, and if you want to build a world with open verifiable intelligence, um, the thing that obviously is the most valuable, and what we're seeing right now is, saturation. Everybody is training on the same set of data which is available on the internet, right? So you look at where that's going. If the data is the same, you're going to get very similar results. You're not going to get some unique results by using the same data, because the algorithms are pretty much similar. So you need to offer new insights, new models, new specialization, new context, new expertise. You need new kinds of data and new kinds of IP. And so this matching of, hey, if you had a registry where people can register like their intellectual property and use that and contribute that for various actions, whether it is, hey, I'm contributing this data for training. So when you think about this particular problem, I contribute data for training. All data is not made equal, right? Think of an autonomous car, right, is driving. And an autonomous car driving, you want things which are somewhat exception events. You want the person driving in snow. You want the person driving like, off the highway. You want like some crazy event happening. Those are the more valuable data items. Just driving regularly is not the highly valuable data item. So we want people to contribute data, but want to contribute them in a way that all data is not valued equally. So then the question comes, who values the data? If there's a verifiable algorithm that can actually value this data, then that can be really powerful, right? So that combination of, you have some IP and I want to earn from this IP going into AI models. We're just talking about one example here of training, but the category of things is, I put up an IP and then I say, hey, here is an IP, and this IP can be used in certain kinds of agentic flows, whether it's training, whether it is in inference time, whether it's in a game that I'm using this character, it gets synthesized in a certain way, like all kinds of things you can imagine, like some combination of an IP going into an AI or an agent, and then producing some outcomes and outputs, valuable experiences, valuable intelligence for users, gets valued correctly, right? Because I need to know that the system is actually valuing my IP contribution correctly. And that's a superpower that I think we found this. It's almost like we'd been like, this big elephant, and we are kind of like, I'm near the trunk and he's near the legs and so on. And then we just figured out, okay, this is how these things fit together. And so we're super excited to like write this position paper together.
So when we're thinking about this kind of removing the black box, right? And Andre, I think you alluded to this, and Shriram kind of explained how there's this kind of intricate leveling of sophistication in terms of like what type of autonomous beings, like there's level 1, and then it goes all the way to thousands and thousands of levels of difficulty. So there's this kind of like provenance layer, and then there's like this verifiable computation layer, and this is kind of where the two of you guys interact to build this intelligence stack. So we can understand a bit of like the why, and so you want this transparent, open economy. Could you maybe explain a bit deeper on the how? Like, how exactly do we take apart what currently exists? What kind of technical undergoings need to happen in order for this verifiable, transparent AI economy happens? Because I think we can all kind of get behind the message, but a bit more on the how would be awesome.
Yeah, for sure. So on on the how, the good news is like all the building blocks are already in place, right? Like it's not like this esoteric thing that, oh, this is a cool idea, let's potentially build this in the future. It really is just assembling Lego pieces that are already there. So I think you've talked to SY recently, right? Andy and Rob, like he mentioned Poseidon. So Poseidon is a ecosystem app that is a story incubated application, and they're basically applying crypto incentives to gather massive amounts of training data that is hard to get on the internet, right? Because if I'm sure everyone's heard of the dead internet theory. I'm introducing a new theory, which is like the scraped internet theory, right? Which is like we should just assume that everything on the internet is scraped. And now the only rare data is stuff that can't be scraped, right? And going back to what Sriram was saying, if we want people to continue to contribute data, especially data that can't be easily found, there needs to be some sort of incentive model. And the good news is that crypto offers a great incentive model for crowdsourced information, right? It could be training data, it could be behaviors, it could be anything, right? Like internet, like with there's Hive Mapper. There's so many examples of crypto incentives in action, and so to answer your question very practically, right? If the training data that users want to contribute, right, is registered on Story, then that data can be seamlessly licensed through Story and then used to train in a model on Eigen. And then anytime, and that can be proved, right? You can prove that specific data was used and inputted into a model. And then you can also verify what model you're using through Eigen. And you can also verify that the inference that comes out of an Eigen AI output is using a specific prompt with a specific model. And so you have attribution and proof end to end, right? And but you do bring up a very good point, and I think, Sriram, we should probably work on like a technical MVP that people can fork and run with.
Yeah.
I think that's definitely an action item on our end. But the good news is, I just want to reemphasize, is the building blocks are already in place, and it's one of those use cases that makes sense to do with crypto, right?
Yeah.
Especially, sorry, I don't want to hog the conversation, but like one gripe I have with crypto is sometimes it's kind of pressed. It's like a square trying to get pressed into a circular hole when it shouldn't really be used, right? I think IP is a great use case for crypto because you have an immutable registry that anyone can contribute to, but not just anyone can change, right? And I think aligning incentives is also a great use case for crypto. So yeah, I'm very bullish on AI and crypto in general, because I think it's a good use case of the technology, and it's not just looking for a solution to a problem, or looking for a problem to a solution to be built.
Sriram, a bit on the how from your side, please. That'd be great.
Yeah. The idea of like registering the IP, right, and then paying out for people who contributed the IP, that's kind of like what Story's kind of like core forte is. You come in, you register your IP, whether it is data, whether it is specific characters, all these kinds of IP, right? So you have that on the one side. What is the how for Eigen Cloud, right? So you can run AI or computation verifiably, right? So so what does verifiability mean? If you run the computation, you know that the specific model ran and the specific algorithm ran and gave you this answer. And these, like I said, are most useful when they are going to make consequential decisions, right? I don't know if you want your chatbot to be end-to-end verifiable, but when I'm using an algorithm to distribute, rewards to various data contributors, that algorithm better be verifiable, right? When I'm distributing, hey, your IP, your character was used in this game like 3,000 times, and therefore I'm going to pay you 3,000 times. Better that computation be verifiable, because now I can contribute my data without actually needing to worry that somebody is going to take advantage of my data without actually paying me for it. So that's the two parts. So you put your IP on like the Story protocol, the computation. Eigen Cloud like is chain agnostic, right? So it just runs and brings the results back to any chain. So, in this kind of like model, what would happen is you put your IP there, you register it, and you say, here are the conditions, that algorithm can run and distribute to me money as much as the data is useful for training. And all that runs on Eigen Cloud. It provides a verifiable certificate. Your data was used like 30 times, or like it improved the training or the objective function or performance this much. Therefore, you're going to get paid out this much, and that signal comes back to the story chain, and it can actually settle that. So the connection is data, computation, payment, right? So data and payment happen on story, and like the computation, inference, that happens on Eigen, and that's end-to-end verifiable. And now that creates this fully incentivized, permissionless, open, verifiable intelligence stack. So we're calling it verifiable intelligence. This is one of the things when you think about crypto and AI, a lot of people approach it with the lens of crypto means decentralization, right? That's where they start, right? Crypto means decentralization. I think we start with a slightly different view, right? Like Eigen Cloud's branded as verifiable cloud. And we think verifiability is the bigger value proposition of crypto. Decentralization is an input, verifiability is the output, right? Even in the history of like the internet, you see like there were very early decentralized systems like BitTorrent. You can send videos, data all around the world. And it was, I think in 2008, it was like 40% of the internet was just BitTorrent. So it played a big role, but very little in terms of value accrued and created, because decentralization is one aspect. When you have end-to-end verifiability, Bitcoin is a verifiable kind of like decentralized stack. Once you have end-to-end verifiability, that gives you a different kind of value, right? Because and that's the same approach we're taking in crypto AI. A lot of the initial approaches were more related to decentralized AI. Or can I get many nodes to participate, like all those kinds of things. But the place where we think decentralization matters is it's open, permissionless data contributions, right? Anybody can contribute data. And why would they contribute data? Because they don't need to trust Andrea or me that like we are going to do something correctly. They just need to understand that the system verifiably enforces that payment condition based on whatever rules that have already been set. So that's the new angle that we have, and I think we're super excited about it.
Yeah. And yeah, please, Andrea.
No, sorry. I just wanted to add something super quickly. I think I think Sharon did a good job kind of painting the incentive layer. I do think in everyday use cases, not just in data contribution, but also in using AI, going back to the consequential decision making, right? Like imagine an agent doing shopping for us. I would very much like to prove and be sure that that agent is not, doing some form of advertising behind the hood, right? Is choosing certain vendors because they've paid, it's like the new version of Google PageRank where you optimize your search engine results. Like if the more we rely on agents, the more we should be able to trust them. And so like this goes way beyond just data contribution incentives. Obviously that's a huge part because that's how AI will continue to get better. But the more we lean on agents to do stuff for us every day, the more we would need to be able to trust them fully.
Yeah. So one other example on this, like beyond like training data contribution, is you go to ChatGPT and say like, hey, convert my image to look like Brad Pitt or something. It'll say, no, I can't do it, right? But imagine Brad Pitt opted in and he said, like, whenever somebody asks me, like, each time you make an image in kind of like whatever cross or something, give me like, 1 cent, $1, whatever the payout is. Now, if this algorithm's running in a verifiable way, I can just say, okay, here is my, like, all the people who have opted in to do this. Every time that agent, that system actually does those actions, you can just get paid out for all of those use cases. So the family of things that can be done when you have end-to-end verifiability of a agent and intelligence system, combining that with, whether it's training data, whether it's intellectual property, whether it's use of my copyrights, the clubbing between these two is, really, really powerful.
Shriram, building on this autonomous idea that you kind of keep talking about, tweeting about, and here today, is there something of an affinity that you have with this idea of autonomizing a lot of things? Like what is it with you and autonomous vehicles, self-driving cars, robots? Like what's going on here, man?
It's almost a descriptive understanding of the world. The thing that's happening is these agents are getting smarter, right? And as these agents get smarter, the nominal thing is they become firstly entrusted with more and more actions. So we call them verifiable agents, right? So agents that are trustworthy, that are verifiable. So you don't need to worry about like, what actions, it takes. One example that I just want to give is we did a thing with Polymarket and Kaito. Polymarket had this concept called, a mindshare market. Who's going to have the most mindshare among all projects in 2026, right? But mindshare is an amorphous concept, right? What is mindshare? Do you count every tweet? I'm talking about Ethereum, but I'm talking about story. Is it about story? You need some intelligence to like evaluate how much like this tweet should count, right? As an example. And so there's some algorithm, and Kaito, for example, has pioneered a lot of algorithms for analyzing these kinds of data and then like presenting mindshare scores. But it's a black box, it's opaque. And then like people complain, hey, Kaito did this, maybe they changed the scores, I should be really getting more yaps, we've all seen this kind of stuff. But once you make that verifiable, right, you say like, what we did in that collaboration is Kaito uses Eigen AI in the backend to resolve this market, to compute mindshare. Now this AI is running in this particular way using these data and then resolving it, right? So it's an example of a verifiable agent. And because the agent's resolving a prediction market where there may be millions, hopefully billions of dollars bet in the future, you want to make sure that that is done absolutely correctly, right? So that's the utility of this verifiable AI and agents. But the next era that we're envisioning beyond just verifiability is autonomy or sovereignty, right? And sovereignty is an agent has its own money, it does its own actions. People like us may just be owning shares in this agent or income shares or wealth shares, but it is its own kind of being. It just makes its own decisions. The crazy thing is there is no other substrate for building a fully sovereign, unstoppable agent. Like this is not a thing that's like possible outside of crypto. And people like, at a very high level intuited this, and they say things like, oh, if you give an agent an Ethereum key, then it's kind of like secure, or like it can be sovereign. But that's not really true, because if you give an agent like a Ethereum key, where is this agent running? Is it running in your desktop? Is it running in some server? Is it like wherever it's running, the key is there. It's a custodial agent, right? Whoever controls the key is like the Lord of the Rings, right? So the ring is the key. So you control the key, you control the agent. So you can't really build a sovereign agent. But this is the idea of smart contracts. A smart contract is a program that can own property, right? It's a program that is living on the internet that can own property. Like the Eigenlayer program owns $12 billion of property, right? I mean, it because it's a specific program, it only spends that money in the specific way it's designed to. But think of hot swapping Eigenlayer out and putting an AI in, right? If I can just take an AI agent, make it like a smart contract and slam it in, suddenly you have an agent owning property. This is unbelievably cool. This is not a thing that has ever existed till now. And I think very, very, very few people even understand something like this is possible. I'm talking about, in this year, right, in 2025, maybe like $500 billion is spent on AGI, right? Artificial general intelligence is going to take over everything. We need to but nobody knows that. Very few people know. In fact, there's a very cool interview with the Microsoft CEO, Satya, where, he's asked like, is AI a new species? And then Satya says, no, it's not a new species because, they can't own property. They can't take liabilities. They can't start companies. It's only humans that can do all these things because of our legal infrastructure. But that's precisely what we do. What blockchains do is like break those constraints. And then suddenly you can have, and imagine an autonomous AI scientist creates new like discoveries and patents and throws it on story, right? It has an IP that it's protected. It has a patent that it makes money off, right? So you can create very, very interesting configurations. So that's the kind of thing we're excited about.
And I know for a fact, just to add on to the, going back to what Sachin said, like the agents don't have an identity, can't own a bank account, et cetera, et cetera. I know for a fact that several governments are working on legislation around sovereignty and identity for AI systems.
That's crazy, man. That is
Yeah.
bonkers.
Yeah.
Wow.
And it's, yeah.
We're gonna need
I
Eigen
heard
in
it from
story, I'll tell you that much. Or else we're gonna get Eigen Cloud in right in the face. Boom, robot comp. Oh boy, that's nuts. Please continue.
Oh no, that was it.
Yeah.
It's exciting times ahead.
Shriram, what's your timeline for autonomous? Okay, so I was talking to this guy, Tang today about when will I be able to have an agent in the normal world that is just going to be able to book my flight and like book my reservation and like call that Uber for me. These types of things. He was like, he was like 2026. He was like 2026 is the year of the agent. I think it's like firmly up. This autonomous agent that you're describing seems to be like a next order of thinking past that. What would be like your estimated timeline, or like how do we get there?
Yeah, I think it's less than 2 years out when agents like are fully sovereign. They have enough money. I have a bet in 10 years, fully sovereign agents will own more than $1 trillion. 10 years, fully sovereign agents own $1 trillion. The comparing like a booking agent to like a sovereign agent seems like the sovereign agent needs to be much more powerful, but it's not really true. It's just a different access, right? A personal agent needs to know everything about Andy and like needs to have a lot of your personal context to actually be a personal agent. But an agent that just does music or like and just creates record hits on Spotify, an agent that creates like new like code or proves new math or like other things, doesn't need to know anything much about you and me, and doesn't need to have the hooks into our personal context.
Yeah.
So it could even be much earlier than when you have a ticket.
That makes sense.
Because the ticket booking agent is bound by our existing software and data and where it's sitting. Whereas a new intelligence, that'll just do something. And the other thing is even comparing general intelligence, right? So people talk about AGI, ASI, artificial general intelligence, super intelligence, right? General intelligence is intelligence across the board. But like a sovereign agent might be hyper specialized, a super artist who just knows one thing, but that thing so well that they can make a lot of money off it.
Yeah.
Right. So the sovereign agent takeoff can be much earlier than like general intelligence or super intelligence in a general way.
Yeah, and just to build off of that, we've been talking about IP going into training data, right? But as agents get specialized, similar to how Sriram is describing, right? We get more and more dedicated models, creating more and more fine-tuned and dedicated agents to do very specific tasks. They become IP themselves, right? And agents that do have hooks into your life and become your personal assistants will need to delegate actions to specialized agents. And that's where the IP will need to be licensed and will need to be exchanged, and there will need to be transactions on, right? And so I think autonomous agents and fully sovereign agents is also correlated with an agentic economy of agents transacting amongst themselves. And some of those transactions can be very simple, just fungible tokens, whether it's dollars or crypto, but also non-fungible, like skills, know-how, right? It's like, hey, could I borrow your trading algorithm to help my client? Yes, you can use it according to these terms, and that's a license, right?
Yeah.
So like, there's an infinite amount of use for just IP in the realm of AI, and agents are going to be probably the biggest power users of it.
Well, gentlemen, you've outdone yourselves once again. What's new there? Thanks for joining us. Congratulations on the collaboration and on the continuous growth for both of your teams and protocols. It's been a pleasure. This world is accelerating so fast, Rob, and we've started to use. Yeah,
this is really exciting because a lot of times we have guests come on. They talk about AI as like this mystical concept that is really intangible and difficult for people to grasp. And you guys came on and you said, here's the why, here's the how, and here's some concrete examples on how it could improve our lives or potentially go catastrophically wrong. And I'm glad you guys are the good guys and doing the good work. So
Shriram, we got to get you on a pod with Emad. I think we almost did it in Singapore that one year, but that would be gnarly. That would be.
Let's do it.
So, Shriram, Andrea, guys, thank you so much.
Yeah. Thank you.
Best of luck.
Looking forward to the next one, guys.
Happy holidays.
Yep.
Thank
You
so
too.
much.
Talk to you soon, guys.
Bye, guys.
Andy, Robbie, Andrea.
Cheers.
Bye, Sharon.
Alrighty, up next we've got our boy Andre from the lovely DWF and Falcon Finance. I think we're going to talk a lot about market cycles, where we're at in the general market making world, as well as RWA landscape. So we're going to fire that one right on up and get Andre up here when he's ready.
Yeah,
well, that was a fun episode. That was a fun little segment there.
Yeah, that was great. I mean, those guys were two of the guys that, they make AI much more approachable, and it like really makes you think, because it's like, oh, well, if the Google CEOs or Microsoft Satya is saying, well, AI isn't a new species because it can't own property, and Sriram comes on, it's like, wait, AI can actually own property. Well, what does that mean about AI being a new species?
Well, we've got we've got data centers in space coming. Yeah. So that's going to be a journey. So guys, we'll take a quick break and we'll get Andre right up. See you guys in just a sec.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or... All right, we will get Andre up. Andre, welcome to Rollup TV. Good to have you, man.
Yeah, all good. Thanks for having me today here.
Yeah, man.
Absolutely.
It's been a crazy couple of weeks in the market. I saw you. Were you just at a Binance Blockchain Week, or I saw you at some conference recently? On Twitter.
I was in Dubai last week. Participated in Binance Blockchain Week when. Yeah.
How was the sentiment in the crowd? How was the general feel of the market? Was it really pessimistic? How was it?
Yeah, look, the market, while the market is very pessimistic, right? There were a lot of, expensive advertising, a lot of nice cars, a lot of people, right? They discussed like a lot of things like RWA, crypto and center, right? From my point of view, the sentiment was very good, and now we sit at 95K per one BTC, right? And I cannot say that it's like a bearish market. It's like BTC almost 100.
I know, right? It's crazy. Bitcoin at 100K, and people are like, "Oh my gosh, the world's falling." And it's because of their altcoin portfolios, Andre. It's because of the performance. So
It's
before
because
we
of a
get-
lot of things.
Well, yeah.
What do you think? Andre, why do you think this is? You know, people are driving in nice cars. Bitcoin is almost 100K, but people are upset. Why?
I don't know. Look, I think the thing is, right, that on the crypto space, right, people are happy when everything is going up. You know, everything is going up, and it's very certain, right? I buy some things today, and it will go up tomorrow, right? I found some, old advertising in my iPhone, right, that I kind of made a picture like a few years ago in Asia, right? And it was something like this, that Bitcoin appreciated another 10% this week. Let's work, right? But it's great, but now everything is also great, right? It just doesn't meet the people expectation. What I think.
Yeah, man. Well, man, you are a extreme sports activist. I assume some skiing in there. I don't know if you're a big snowboarder or a skier. I assume so, considering your profile picture and your background, as well as just kind of being in Europe in the Alps at times. I want to talk about that. But you are also a dog lover and the head of DWF Labs, as well as Falcon Stable. A lot going on there. Man, what does a day in the life of Andre Grachev look like? Talk to us about kind of what your kind of day-to-day is, what, the people that you're managing, the companies that you're overseeing. What does a day in the life look like?
Look, the first of all, right, I have a very kind of strict sleeping schedule, right? I always sleep like at least 8 hours a day and go to bed at 10 and wake up at 6. It's like since years, right? Because I do believe that it helps to keep performance at a very high level, right? Then of course, like a lot of work since early morning, because we're very focused on Asia and also in other like Middle East countries as working time there, right? And basically having the calls like from like 6:30 and 7 a.m. my times until like, let's say 1 p.m. Then some gym, some other sporty stuff, right? And some more operational work, like with papers, with I don't know, some good conversations with colleagues, right? And then end of the day, it depends. Today I have interview with you guys, right? Then I have like 4 calls today till like night time, right? Because there are a lot of things going with the people who are based in the American time zone. Yeah, that's like this.
Yeah, it's pretty.
No weekends, probably. Well, frankly, we work like with
no weekends.
Yeah.
There we go. All right, man. Well, you guys have been doing some really interesting work in the RWA space. Let's start with this stablecoin product, USDF, that you guys have built out from the Falcon perspective. You guys have brought in a couple institutional grade RWAs. We'll get into that. Talk to us about what USDF is, what kind of the inspiration behind this product was, and just generally like what Falcon's role is with USDF.
Yeah, regarding inspiration, right? We do trading, right? And we do market making since like years, trading since like many years, right? And like a few years ago, especially and in 2024, we started receiving a lot of requests from our clients to manage their assets. For example, a foundation has coins, right? They want to have yield on these coins, right? And they wanted us to manage it, right? And basically, we realized that our main expertise is how to manage the risk and how to identify, let's say, fair dollar value of like any asset, right? And we can price it nicely. And that's how Falcon Finance idea appeared, right? Because we realized that, okay, we have prop trading arm, we have client-facing arm, like market making, liquidity provision, investments, right? But we also want to have something like, let's say, asset manager arm, like Falcon Finance. And we built it in this February. And from 0 to 2.5 billion today, we grew like in the last 10 months, right? And basically, the idea is very simple. You have an asset that is not yield bearing. You put it into the Falcon finance product, and you get USDF, and you have dollar yield. That's basically a very simple idea, right? And you can adjust what kind of upside you want to have from your asset, what kind of downside, like liquidation, you want to have with your assets. And basically like this. This is the Falcon Finance, and USDF is our synthetic dollar, which represents like dollar value of your assets and of yield. And you can redeem USDT, USDC, or whatever stablecoin you want from us, or you can even redeem fiat to your bank account. Yeah.
Got it.
That's the idea.
Cool. Okay. And so you guys brought in a couple of these institutional products, JAAA, JTRSY. What are these RWAs, and how does, thinking about bringing high quality credit on chain unlock better yield for this USDF product? We got Jerome Powell has cut the rates by 25 basis points. The yields are going down for stablecoin yields. You really need to go out and find different types of products to provide this consistent yield. Talk to us about like how bringing this private credit markets on chain unlock better yield, better liquidity for this product, and kind of how this worked.
Basically, they say what assets and private credit, it is like a huge market on traditional finance, right? And this asset that you mentioned is tokenized private credit, right, with good on-chain liquidity, because we work with the this tokenization platform, right, and they can redeem cash like almost instantly for these assets, right, and it generates yield. And we believe that now you have this tokenized debt, let's say like this, right? And you can have some yield on this, right? But then you also may have a need in terms of liquidity and some other form of flexibility with your assets. And then Falcon is more than happy to accept your tokenized debt and give you some USDF against it. Then you don't lose your debt, but you have liquidity if you want. Or if you want to increase your earnings, you can do some DeFi strategies with USDF, or just take it and get yield. Yeah, it's basically the idea behind it. And we believe that RWA market will be bigger and bigger in the crypto space. And we want to build an infrastructure that will be ready, and we will battle test it when more institutions join the crypto market. Yeah.
I'm curious, from your experience as a market maker and after launching all of these products, you've worked with, several dozens of companies that are in, the top 20, top 50, top 100 of coin market cap. What would you say separates like a good, obviously everyone wants charts to go up and to the right? Not everyone can get what they want, but what would you say separates a good market maker from a poor market maker? Like, we see different teams have, these spikes, call them crime pumps, where like it's very obvious that like teams are just trying to get out as much as they can and extract.
In fact,
value.
we've heard of people trying to acquire certain companies just because they have a special pump market manipulation process that they can do on Binance just to get out. It's been very, very interesting year.
Yeah. And so there's tactics, but to do things the right way, and also for the collective overall good of the people that get involved early, the people that are building the product, everyone should reap the rewards of a successful product. How do you execute these strategies tactically as a market maker?
Basically, look, considering the strategies that you mentioned, right? First of all, right, I do believe that it is a not sustainable business model. It probably may work for a short period of time, but it's not sustainable, and it carries a lot of future risks, right? Because you never know when some investigation will happen, when some bad thing will happen, right? And that's why we stay away from this stuff. But definitely we trade all the coins because we do HFT, right? And in terms of definition between good and bad market maker, I would say that market making itself, like liquidity provision in the current stage of the market, right? It's a very common and very simple thing. Basically, almost any company can run this. You can buy some software, right, and run your market making business by yourself. It's not a big deal, right? I think we are on that stage of the market, right, when the market makers should kind of decide what kind of role they want to play in the market, right? If you're HFT and you trade like on the exchanges globally and contribute liquidity to the global exchange markets, right, as a traditional space, it's one story, right? Then if you work with projects, right, what you offer? If you offer just liquidity, okay, this market is very competitive. There is almost no margin now, right? And I think this is a very weak point from a business standpoint, because if you don't make money from trading, you can rely on your market making portfolio. But given that increased competition, margin of course decreasing, right? And I feel and I know that many companies have like big troubles now because they relied on crazy margin that market making business had like years ago, but now it is not like this. And it's not enough to say, hey, I provide liquidity, I provide reports, and I can make like a fortune from it. No, it's the end, right? And then the definition between a good and bad market maker, I think, is more about if you work with a tool, right? And then no difference if you buy your software or if you hire a market maker or if you work with a partner, right? And we believe that good market maker, right, that can kind of help you to push your chart, as you said, right, up and right, is the company that know how to go with go-to-market strategy, how to work with PR, how to work with user acquisition, has partners, has connections, has a circle of VCs or other important counterparties in the space, right, that can help you to grow your product, that grow your market share, right? And then the token performance will follow, right? Because I don't really believe in this manipulation stuff, right? Because market is very smart now.
Yeah.
There are a lot of professional traders, right? Even us, we do this, right? Because when you see that something is pumping just with no reason, right? If you trade properly, right, your algorithms will say that it's something like that could not happen.
Yes.
And you should sell it, right?
Yes.
And then basically those people who try to replicate these stories, right, they lose money, right? I also heard a lot of stories, but then we did some market research. It's all marketing. It's all fake, right?
Yeah. Yeah. Andre, I'm curious. There's in the same lens, there's been so many of these liquidity wars in 2025, whether it be incentive mining, airdrop farming, points programs, market makers creating different dynamics. We're kind of entering this new market environment here where people are looking for fundamentals. Like Hyperliquid has done so well this year because of this revenue and this buyback. People are excited about other tokens that are have this better, stronger value here. From your perspective, what do you look at to evaluate whether a protocol or a token has real economic durability? What kind of metrics, numbers, stats, and when you're kind of assessing the probability of success of a given protocol, what are you looking for?
Oh, look, basically, it should be a useful product, right? It's not only about tokenomics when you explain that, okay, people may use my token and my product, and then the token will go up. Because people may not use your product at all, right? Because it's useless, right? It should solve some real problem, right? What real problems we have of the market? It is trading. It will always be on the market. It is lending and money markets. It is payments. It is investments, and basically some form of infrastructure. This is a kind of and yields, yes. And this is like permanent narratives, right? And then we see if this project can play around these narratives and solve some problems, right? And if the team can really get the users, right? And if the answers are yes, yes, we are in, right? If the answers are no, no, we need to see, right, if we can help. Because some things, they may be so innovative that makes sense to join, even if they're kind of unrealistic now, because this is like how venture business works, right? But in general, if we are talking about a kind of scientific approach, you should rely on like product that really has users, and these users are not using this product because of the airdrop, right? And it should not be a product around token, right? Token should be a nice thing on top of that, but it should not be cornerstone. This is basically like this. Great example is Hyperliquid, right? People started trading it before token, and they contribute a lot of TVL before token.
Are you very, very bullish on a certain category right now, or a certain set of tokens? Like, what are you looking? Like, are you accumulating any new assets in this downturn, specifically a set of assets from the market making / fund perspective? I know you guys raised like a $75 million DeFi fund, which I'd like to talk about too. But is there any particular set of assets or bucket of kind of like general categories that you're excited about?
For now, we're more focused on kind of investments in developing projects and incubating them and helping them to grow instead of buying, like cheap tokens on the market. Because basically, the fact that the coin was priced, let's say, 2 times higher a month ago doesn't make this coin cheap now. Maybe it will be cheaper in 1 month, right? We need to see the fundamentals, right? But yeah, we bought some coins, right? Of course, we bought BTC, a lot of BTC, right? When it was like 82 plus K.
Okay, nice.
Yeah.
Do you think that we see new all-time highs in 2026, or do you think that we get more of a bearish market?
I believe in new all-time highs. I really believe
in first half of the year or second half of the year?
I think first half of the year.
Wow, awesome.
It's my opinion, right?
No, of course, not financial advice, and why do you feel that way? Is it just like the market structure that you're seeing? I was looking at Coinbase put out this little post that was like, speculative excess has been flushed out. Our systematic leverage ratio, which tracks purely speculative positioning, has stabilized at about 4 to 5% of the total market cap, down from about 10% from this summer. Lower leverage equals healthier market structure plus less vulnerability to downside risk going into the end of the year. That's just from now until the end of the year. Is that a similar kind of idea that you guys have?
Yeah, basically it's a very similar idea, right? A lot of leverage got decreased, plus a lot of leverage got liquidated in last month. And frankly, a lot of great things happened. And basically the whole market situation is bullish, right? There is nothing bad. There is only bullish regulation, right? There is even yesterday, right, or today, SEC chairman announced that ICO is not like a subject of SEC and kind of supervision, right? And I think everything should be fine, right? But plus also turbulence on fiat markets and the global kind of inflation of fiat currencies will make crypto and especially Bitcoin stronger, right? I think
you don't believe in the 4-year cycle then? You don't believe in the 4-year cycle? The 4-year cycle is done.
I don't really believe in 4-year cycle, right?
Yeah. We also, we believe that, the 4-year cycle was very important when the block reward and the halvening was very significant portion of Bitcoin supply. But as the block reward diminishes down, it becomes a less significant impact on the supply of Bitcoin, and therefore a less significant impact on the price. You mentioned that last month there was a lot of bullish things that happened. I mean, are you referring to 1010? What are some of the things that, you mentioned and you say, like over the last month, we have the SEC. Was there anything else that you saw in the market or in the flows that leads you to believe that, this is something that is positive accumulation for Bitcoin and the broader market going to 2026?
Look, basically the kind of nuclear bomb that collapsed in October, right? All this leverage collapsed, right? On the one hand, it was a very bad event because it drained a lot of liquidity. On the other hand, it made the market much healthier because no leverage, right? And we found the kind of bottom line of it, right? Of course, It is kind of virtual bottom line, but it is a bottom line. And now those Bitcoins that could be sold, they sold, right? And I'm not talking about altcoins, right? I'm also talking about BTC, right? And a lot of positive things happens in the kind of the global space. What I mean, more BTC regulation in UAE, right? More BTC regulation in the US, right? China launched the mining machines again, right, in Sichuan region, and it is happening, right? Pension funds accumulating BTC, right? It's all bullish. If you can imagine that even one of these news would happen in, let's say, 2021, we would see like Bitcoin, I know, 1 million, I think, right? But now, because of the overall crash and the amount of fresh money is kind of very small, we need to just wait when more money will come and the assets prices will go up, right? It will happen. And I also believe that it will happen first half of the 2026, because a lot of institutions, especially in the US and like basically globally, they have December, the end of the financial year, right? And nobody wants to kind of affect their P&L in the end of the year. People wait till January and then they can deploy again, because now it would affect bonuses, it would affect some P&L calculations, etc. Nobody wants to do it.
Yeah. So basically, take it easy, enjoy the holidays, make sure you've got your cozy and spot, and strap in, boys, because Q1, Q2 is going to be electric. I think we see Clarity Act, we see institutions coming on board. Let me flip the bear case is the technicals, right? You've got the bull case being these liquidity impacts, you've got the regulatory impacts, you've got rate cuts, you've got a new Fed chair, you've got Trump just taking control of the Fed basically, and might as well just put them all into one, because Trump's just going to select somebody who wants to do what he wants to do, and what he wants to do is stimulate the economy.
Yeah.
So you've got like, they're going to run this thing hot next year, right? You got that happening, but then you look at the charts, and Bitcoin has been in a 4-month downtrend. It has fallen through key levels. It's now testing previous supports as resistances. A lot of altcoins or non-Bitcoin tokens are really looking bad. Their structures have been broken. It's hard to look at the charts right now and be like, I want to be allocating. It seems like it makes more sense to kind of wait until a more positive development happens and kind of reallocate on the way up, rather than kind of, perhaps before another drop. So you've got this kind of technical element that's fighting against this like more fundamental liquidity element. And you're just saying, look, technicals are technicals, but all these other factors are going to outweigh kind of what the charts are saying.
Yeah, exactly. And those companies and people who have money and have like enough market experience, right? I think they are buying Bitcoin, right? Because it's a good entry point for now. But when the Bitcoin offering will be decreased, right? Prices will go up, and others will join this space.
Yeah.
It always happens like this, the crowd buys when the BTC price is going up.
Yeah.
Not many people bought BTC when it crashed to 15K in 2022.
No.
Right?
And do you think that the digital asset treasury companies are safe? Do you think that we're in a good spot there? Or how do you think about that with regards to the market structure? Let's just focus on Bitcoin and ETH.
Yeah, let's focus on it, right? Look, basically, I think this market with Bitcoin, DATs, and DATs market and ETH will exist, right? But it will be a little bit changed. I don't know how, but it must be changed to survive, right? Because for me, that market it was like ICOs in 2017. We had just a few ICOs like ETH and Centraid in 2015, right? You can name it MicroStrategy, right? They were the first. And then we had like a lot of ICOs in 2017, right? Starts from April 2017, you could run any shit and name it ICO and raise a lot. But in September 2017, you couldn't do this, right? And in November 2017, you would be highly likely beaten for offering the ICO, right? And the same situation with the DAS, right? Yes, they raised a lot of money, but the premium, this MNAV premium play kind of exhausted, right? And this market should offer something, right? What this could be, I don't know, maybe yield, maybe something structured products, right? It must be developed somehow else, right? But the overall situation is that a lot of people and a lot of companies lost money on the DATS. They will exit, then prices will stabilize at some point, right? It should be consolidation. Some M&As should happen, right? Because it's good to buy Bitcoin with discounts, right? Then, for example, distribute treasuries. It will also happen, I do believe. And then some other models will appear, and someone will raise some more money for kind of that 2.0, right? Let's name it like this. We don't know how it will look like. And then this market will grow up again. And you remember how crypto grew from 2017 and 2020? I think we should expect something like this.
And maybe it's a little bit too early to determine whether, what exactly this new catalyst is. But generally, would you say that is going to come from inside the core crypto industry? Because Andy and I talk a lot about what is currently happening on the periphery. Like, we went to New York and we saw Fidelity, BlackRock, a lot of financial institutions are coming in. A lot of Silicon Valley tech, more fintech, Web 2 technology companies are coming in. We were around in 2017. We saw ICOs. We saw Uniswap V2, AMMs. Like, inventions, core Web3 primitives was a result, a catalyst of things that we went out and we grew the space outward. Now it feels like we're getting more money coming in to the existing primitives. So from your estimation, do you think the next catalyst is going to be the institutional capital coming in to the primitives that we already have? Or do you think we're going to see some sort of invention, some new primitive that is going to attract a lot more of this capital?
I think crypto market is kind of developed. I mean, in terms of products, and I think it will not be just one flow, but definitely it will be institutions, right? That they will definitely join, and I do believe through some structured products, right? And also thanks to some, mass adoption tools. For example, Xiaomi announced that they will pre-install Sei wallet into each new Xiaomi smartphone, right? Which means that a lot of people will know that Sei exists, right? It's not about Sei, it's about crypto, right? And when people would know this, it would be some like conversion rate, and then more users will come. And I think it's like very, kind of native process. It's just a point of time when the people will come. But we have a lot of great products. Of course, they must have maybe new primitives. We don't know what kind of primitives, that there will be some invention, right? But we already have enough of things to play with. Like, quite a lot.
Yeah. Andrea, as we wrap up, man, are you skiing this winter? What's your skiing plans? Snowboarding.
Yeah.
How's the snow out there?
It's okay. I did a bit of snowboarding this weekend. Yeah.
Oh yeah, sick.
Yeah.
Super sick, man. All right, man. Well, hey, thank you for joining us. It's been a pleasure. Appreciate you answering our direct "tell me where the market's going" questions. I appreciate your insights. So thanks for joining us, man, and congratulations on the success that you've had. You've built one of the largest, two largest, companies in the space. Very well known. So very much appreciate it, man.
Thank you so much, and thanks for your time, guys.
It was great. Appreciate it, man. We'll see you next time. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to havachi.xyz to start trading today.
Looking for you. All right. That was Andre from DWF, who is very bullish. He basically is like, stay the course, guys. We're going to go higher. We're bottomed. Institutions are here. Don't listen to CT.
This guy's got tons of market making experience in the space.
You really had the audacity to ask him about the shenanigans, knowing that there's shenanigans happening everywhere.
Of course, because he's still around. And I think you got to look at the people that have been around long enough to know where the shenanigans happens tend to stay away from it because they know if they get involved in the shenanigans, that's how people
Then
blow
they don't
up.
stay around. Yeah, exactly.
Don't stay around. So,
well, we got big news today. We got Coinbase and Chainlink CCIP.
Huge.
Coinbase is selecting CCIP as the exclusive partner to move Coinbase's assets cross-chain, amongst other use cases. We're going to hear about that directly from Will. Let's get Will Riley up, the head of CeFi sales strategy and more at Chainlink Labs. He's right in the back. We'll bring him up right in a second. Let's talk about this news today. Rollup TV live Thursday, December 11th. We're in Florida. We're having a good time. Let's get Will up on stage. Here we go. Will, what's up, man?
Hey, guys. Great to see you.
Absolutely.
Good to have you, man. How does it feel, man? How does it feel?
Feels great. Some exciting news came out today, obviously. Chainlink CCIP selected by Coinbase to supercharge their CB assets and bring them to a multi-chain world and bring them cross-chain using highly secure and reliable systems, such as CCIP. Super pumped about this. Long time coming. Been working with the Coinbase team for many months, practically a year on this.
Yep.
And incorporated, I think you guys probably saw last week, they also selected Chainlink CCIP to be the independent verification layer of their base Solana bridge, which is also very exciting.
Yeah, man. Can I ask something about that, Will? Before we get into the CCIP Coinbase wrapped assets announcement, do you think Base is trying to vampire attack Solana?
Ooh, vampire attack. I think what they're trying to do is create a more unified world on chain, quite honestly. I mean, look, everybody's got liquidity parked somewhere. In the end state, I think at the end of the day, folks don't really mind which chain they're on. They care about a very smooth and powerful UX. And honestly, I think that's how we get to mass adoption.
Beautiful, beautiful. Good answer. Good answer. Very diplomatic answer there, Will. All right, so Coinbase, the leading publicly listed firm for digital assets, and Chainlink, the industry standard Oracle platform, today announced the selection of Chainlink CCIP protocol as the exclusive bridging solution for all of Coinbase wrapped assets. They currently have an aggregate market cap of approximately $7 billion. Will, why does Coinbase need to use Chainlink for and CCIP for moving their wrapped assets around? Why couldn't they just use something else? Why is it so important for Coinbase to get this one right?
Yeah, so look, they really took their time. They really did their homework. They really looked at the market as a whole. And when you are an institution like Coinbase, security, reliability, doing things like making sure they get it right, like you said, is of utmost importance. I mean, this is a publicly traded company. So when you look at selecting somebody in market to perform with them side by side, I think you guys joined us out at SmartCon, which was great.
Oh yeah.
But I mean, we had the likes of JP Morgan, DTCC, Swift, these types of entities. They're also, looking at and testing and utilizing CCIP in many ways. Honestly, just kind of when Coinbase is playing in that type of arena, they want a system that has that level of security and reliability. You can't be, as a publicly traded company, you can't be putting your user base at risk.
Yeah, that's what it's all about. Like you said, CCIP was selected by Coinbase for their cross-chain needs due to CCIP's security and reliability. As a leading publicly listed firm for digital assets, Coinbase takes security and reliability for their products seriously. I'm excited about accelerating the growth of Coinbase's wrapped assets. I want to ask you about the growth in particular. How will this partnership, the security, the reliability of CCIP from Chainlink help accelerate these assets, the adoption of these assets, and the ubiquity on chain?
Yeah, great question. So right now, CV assets are only minted on a few chains. For instance, if we look at CBBTC, this is natively minted on Ethereum, Base, of course, as well as Solana today. Now, when you really want to expand these assets out into new, maybe quote unquote exotic chains or day one chains, you really want to take, again, that security focus in their lens as a first step. So utilizing CCIP, they're going to be allowed or enabled to bridge wrap via CCIP these assets to nascent chains that they don't have native minting on available today. This allows that ecosystem to start adopting something like CBBTC and incorporating it into their DeFi environment. And when the time is right and when the infrastructure is in place on Coinbase's side, there is also a feature set within CCIP where they can natively upgrade into a native issuance on that chain. So if we look at the many proliferation of chains that are coming out today, specifically the DeFi focused ones, this is where you're going to see CB assets that weren't there are going to start popping up and even be a part of day one launches as well.
Yeah. Well, I'm curious, as the Chainlink protocol and organization has really came into its full force into the institutional world, I saw Chris and some of the others were out in DC this past week for the DC Gala. There was a ton of policymakers pushing on this market structure bill that is seemingly within 24 hours of having a lot of big changes on it, or some sort of next big kind of push forward. That in one realm. Then you've got Sergey really coming into his own into the institutional realm as well as the kind of policymaking realm. How much do you think the brand evolution of Chainlink has influenced decision makers from publicly traded companies like Coinbase to feel comfortable with using CCIP, using Chainlink for a variety of different needs? How much of it is brand versus how much of it is the reliability of the tech?
I think it goes hand in hand. You don't build a brand that is unreliable. You don't build a brand that is involved in these fly-by-night exercises. I think kind of like before I joined, you guys were talking about, being in the space long enough, which I've been in around 8 years, you've seen enough booms and busts happening. And when you participate in those type of, less savory business practices, this ultimately takes your brand. Also, if you look at a technical track record, things like hacks, things like failures, things like multi-million-dollar or billion-dollar explosions, which we've seen on bridges before, These things are extremely scary to publicly traded companies, as they should be. This is why, if you want to build a brand that kind of Chainlink has over the years, you have to have a foundational root in advanced technology and a security-focused tech. But when you're dealing with infrastructure such as Chainlink, I mean, you can look at all of the TVL that's stored on chain today. Chainlink secures 70% of it. So Chainlink has no room for error. Now, when you incorporate that with policymakers, they're looking to expand and start delivering data on chain. Similarly, like we're bringing like the Department of Commerce data to chain. We're speaking to a number of other agencies looking to bring their data on chain as well. These folks are looking at, can they actually be associated with this brand? Can they actually rely on the tech, or will it create a stain on them in retrospect? When you have folks like Brian, have folks like Sergey standing next to the president while he's signing things like the Genius Act, I think that all kind of that mixture starts. Proof is in the pudding at that point.
Yeah, most definitely. So, Will, when you're thinking about the evolution of the Chainlink product suite going forward for some of these more institutional, types of players that are entering this industry, is CCIP the main product that these institutions are interested in? Is it the Oracle product? What is kind of like I don't know, like on Amazon there's like bestsellers. Like, what is the Chainlink institutional bestsellers?
Oh yeah, so CCIP out of the gate is definitely the flavor of choice. Outside of that, we have Chainlink runtime environment. I think I had the good fortune to touch on this last time I spoke with you guys, but Chainlink runtime environment is a next level architecture for Chainlink, and it was really developed with institutional adoption in mind. So this allows for hands-on development of custom Oracle products that even allows folks at these institutions, at these banks, to dive right in and start building their own Oracle products that are built on Chainlink tech. So they get all that trust, all that reliability, all that track record that they've seen over the years in the palm of their hands, and they kind of now get to make the world their own, which is very important for these institutions as well. So to answer your question, CCIP and often its companion CRE, and having those actually work side by side for many use cases, we've really seen this kind of proliferate in terms of adoption from institutes. With CRE, they're able to coordinate actions with CCIP, ingest data, whether it's external data or internal data, and then produce on-chain actions as well, directly on multiple blockchains or even their private blockchain.
And what are the categories that you're targeting for these products? For instance, like, something that I think is a really big deal that kind of seems to be flying under the radar is that the SEC and their regulatory counterparts are saying now that crypto can be collateral for regulated derivatives markets, which is a multiple trillion dollar industry. Now crypto can be collateral. We can use that basically as money to back a lot of these markets. And to me, this is a perfect placement for Chainlink, because you have to unite these two worlds, these regulated derivatives market, traditional financial world, with the new DeFi world. What are these kind of the categories? If it comes to CRE, if it comes to CCIP broadly, not particular companies that maybe you have in the works, but broadly, what are the categories that you're targeting?
Yeah, so if you want to look at like short, medium, and long-term categories, I think short-term categories such as you're describing right now, allowing for crypto collateral, I think this is like toes in the water for a lot of folks. This is now crypto is starting to become a thing for them. The next kind of form there, I think, is adoption of stablecoins, even at the exchange level, these large exchanges that operate in traditional finance markets today. I think this really unlocks things like overnight trading, really allows for weekend-based trading, allows for yield opportunities as well. Outside of that, if you want to look into more of a medium term time frame, this is where tokenization is going to be huge. And this is a very focused vertical for Chainlink. And this is where things like CRE, which can be used as an engine for bringing assets on chain and tokenizing them, as well as having embedded compliance and privacy baked into this. Once you have that, you're able to deliver those cross-chain via CCIP. So it's kind of one stack meets all your needs out of the box. Tokenization, we're also seeing a very large growth in adoption in the payments vertical. And this is, again, where cross-border payments or remittances, or even just how can I get my current retail base to allow to use stablecoins to go buy a cup of coffee without like ruining their privacy. These are, I would say, medium to long term. That's also on, I would say, a very focused roadmap for 2026.
Yeah, beautiful. Will, like, I gotta ask, how did this deal happen? How long did it take? You know, I know dealing with publicly traded companies requires a bureaucratic sense of decision making, as well as PR, as well as all of these kind of factors. Kind of closing out here, what was the process to get this deal done? And what's your special sauce, man?
Yeah, for sure. Thanks, man. So ultimately, I'd say end to end, this was about a 12-month exercise.
Wow.
It took many different flavors and forms as we kept going back on technical requirements with Coinbase, trying to really understand their needs, doing custom design work specifically for their bridge. This was something that took many months of relationship development. One of the fortunate things I have as kind of a head of CFI at Chainlink is I've been engaged with exchanges across the world for many years, and I have had the good fortune to work with the folks over at Coinbase for quite some time. So naturally, them having an established relationship with us and getting interested in the bridging landscape, this was kind of like one of their first stops. They just picked up the phone, gave me a shout, and we started cooking together.
Awesome, Will. Well, hey, man, thanks for joining for us today. It's been a pleasure, and congratulations. Like everything, it's happening. So look forward to having you on again, man. And it was a pleasure to meet you in person, man. You're a nice guy, man.
I appreciate it. You as well, Andy. Fellow Florida guys, just like myself. So always a pleasure to see you. And,
yeah, man.
Thanks for having me on today.
Congrats on the long journey, man. 12-month sales cycle sounds about right, Sal.
Yes,
I'm
sir.
sure you've got yourself in the middle of many multi-month and multi-year ones currently. So we'll let you get back to it.
Yes, sir. And I'll be back on soon. Thank you,
buddy.
fellas.
Exciting
Have a
times.
good one.
Thanks, Will.
All right, Will. All right, man.
Yeah.
What do we say? Chainlink just dominating the institutional realm. What's new there?
Dude, payments, tokenization, stablecoins.
Payments, tokenization, stablecoins.
These are the verticals that are getting all the attention and all of the institutional bid. The
Yep.
institutional TWAP, according to
The
our
global
framework guest
institutional
yesterday.
TWAP.
Chainlink's at the center of it. Look, neobank, Cambrian explosion, new generation of fintech. We're seeing it happen right before our eyes. We're seeing the categories that the market is excited about,
Yep.
and it's different categories than we've seen in crypto natively over the last couple of years. They're on the outside. They're looking at this and they're looking at it pragmatically. Dude, return to fundamentals, payments, tokenization, stable coins, DeFi, and Chainlink is the infrastructure that's underpinning the rise of payments, tokenization, and stable coins.
They definitely are. They've built their brand on reliability, similar to how Stani from Aave was mentioning that they built their brand on resiliency. I think Chainlink has built theirs on reliability. Guys, we're gonna cover some more of the things that we wanted to cover in the beginning of the show. I'll wait for our next guest, Mike. I think we've got the biggest IPO ever to cover, market and prediction drama as well. So yeah, we'll pull these up and talk about them. I think the biggest IPO ever is the SpaceX one.
Yeah. I've got a buddy at SpaceX.
Yeah, how's the morale?
I mean, as you can expect, I'd imagine morale is high. I have not had a chance to talk to him about it, but he did say that I saw him a few months ago, and he kind of explained how the unlocks work. And so each time, in startups, and even though SpaceX is a giant company, they still operate as a startup. And so they're giving away equity, as part of the compensation package to a lot of their employees. And so apparently the way that this works is that each time SpaceX raises a new round, they're able to sell a little bit of OTC to the incoming investors, right? And so you have this option. Usually you get advance notice, maybe like a month or two in advance, and they send out this company-wide email and they say, hey, do you want to sell part of your equity package, some of your options, your stock options as part of this next fundraising round? And everyone kind of has a chance to do that. But as of recently, people have been reluctant to do that because they knew that the IPO was coming up.
At a $1.5 trillion valuation, mind you.
Exactly. And so,
so basically, whenever you join the company, you get some options, then you can sell them every time there's another raise.
So, yeah. So, if the company goes public, then you still have the option to buy the equity at, maybe whatever it is, $5 a share. And then the IPO at, $200 a share, you're gonna exercise your option, right? And so in each of these fundraising rounds, there's not a liquid market, but if you want to get some liquidity for your stock option, you can sell the option, right? And the company will exercise it themselves, and then they'll sell the equity to the incoming investor. But they're about to go public. Valuations are being rumored at $1.5 trillion, and so no one's gonna be selling their stock.
What does your buddy do at SpaceX?
He's an engineer. I think so. He explained it to me. He specifically works on the load balancer for one particular part of the wing. And it's like the Falcon Heavy rocket. And so, every time they test one of these things, they're basically throwing as much as they can at it to see if it's going to blow up. That's how you know that something works, is you get it to blow up and then you go a little bit less than that. So here's a tweet, right? So
that's pretty funny.
He's basically working on one particular part that is like however much it is. It's like a lot of pounds of stainless steel, and he's basically testing how much weight or force this steel can handle before it blows up.
I wonder what the SpaceX funding original round was. Because that is pretty insane. To launch at a 1.5 trill.
Public valuation. Second largest IPO ever.
Last confirmed funding round was around $750 million in 2023.
That was the last one, though, not the first one.
Yeah.
Well, Elon started this a while ago, and they have tons of revenue.
They've raised $11.9 billion over 31 rounds. Yeah, they raised a $12 million Series A in 2002.
Yeah.
Wow. Founders Fund the Series C in 2008. Google Fidelity in 2015, the Series F. Yo, these guys raised a seed all the way to a Series J.
What crypto companies do you think are sustainable enough to raise a Series J?
I don't know. Probably Chainlink. They raised from the Ontario Teachers Pension Plan in Canada. 2000
Ontario teachers are about to get a raise.
2019.
Those teachers are about to get a bump in their salary.
Well, the way that the pensions work in Canada is that the teachers get paid in perpetuity after they retire.
Right.
So whatever your salary is, you
keep getting that.
Yeah, you keep getting that after you retire if you work a certain amount of years.
There's some careers, some unions in America, probably cops, police officers have pensions.
Yeah.
More companies used to have pensions, but we got rid of that. Companies didn't want to pay the pension, so they disbanded the unions. But there are companies that still do that, or careers that still pay pensions, but not teachers. At least not in Florida.
Yeah, not in the States. I don't think in general, actually. So this is huge, man. This is the state of a sign of the times.
Because it's IPO season. IPOs were kind of dead there for a little while. It's also M&A season, right?
They were sign of the times.
And so I think Elon is going to be a trillionaire in 2026 is the way it's shaping up.
Yeah. Yeah. I mean, I don't know how much equity he owns, but he's not a trillionaire yet, right?
No, he's not. But he did get a pay package
For
approved
$1 trillion.
For $1 trillion if he hits all of the milestones according to that benefit,
Which is
compensation
crazy
package.
too, right?
I mean, there was a big debate on whether or not, like, you know, the shareholders of Tesla were going to approve that.
Yeah.
But if I'm a shareholder of Tesla, I want someone to be incentivized to hit milestones. Like, it's not like it was just a salary bump.
Yeah. No, I mean, it's pretty big milestone though. It's pretty big pay package for some big milestones. Pretty sure he has to successfully deploy quite a few more rockets and do quite a few other things.
The pay package was for Tesla, so I don't think it was tied to rocket milestones. But I'm gonna look it up.
Maybe it's probably tied to humanoids. You ought to think it's tied to humanoids, no? Some sort of robotic.
Shariram blew my mind with the AI being a new species.
Oh, it is. It's the craziest part, isn't it?
Yeah, let's see what the milestones as part of the Tesla Elon pay package, especially the newly approved one, could be worth up to $1 trillion over the next decade.
Yep.
Tesla's board designed Musk's compensation entirely as performance-based.
Yeah.
Receives no salary or cash bonus. Stock awards vest only when Tesla hits both market value and operational targets. Okay, so it's divided into 12 tranches. This is how we're going to tranche our employees' compensation packages. Market cap,
$1 trillion.
market cap thresholds if Tesla achieves $2 trillion market cap.
Yeah.
Up to 8.5, and then it rises in $500 billion increments up to 8.5 trillion. Here's what I was curious about: operational and product milestones. Here are the milestones.
Yeah.
Delivering 20 million Tesla vehicles.
Okay.
Not sure how far he is on that roadmap. Deploying 1 million robo-taxis to commercial service.
Okay.
Autonomous ride-hailing vehicles. Delivering 1 million Optimus robots. Humanoid robots. Achieving at least 10 million paid subscriptions to full self-driving.
Okay.
And remember, this is all over the next decade. He has up to 10.
Just do it in the next decade.
He has up to 10 years to achieve all milestones for full vesting of all 12 tranches.
Wow.
If some goals are missed by the deadline, he forfeits the corresponding shares.
Wow.
The last is sustaining high profits measured by EBITDA or similar metrics.
So on the screen here, we've got Jez tweeting a much larger issue here is that both Kalshi and Polymarket report volume on notional, not actual dollars traded. If you buy a 1% chance for 1 cent, it shows up as $1 of volume. Prediction markets are potentially misreporting volumes by 100x, not 2x. If you scroll down, he kind of was like memeing it and he was like, oh, maybe it is just 2x, blah, blah. But essentially, there is people saying that Polymarket is misreporting their volume and over-reporting their volumes.
Right.
This is coming from the Kalshi paradigm cabal. And then the Polymarket people are like, no, you guys are just basically not reporting it correctly. And so Jez and John Wang and some of these others are kind of in a bit of a brawl right now. We'll have to get the update. But there's a lot of conflict. I'm trying to understand what's going on. Yeah, like with the prediction market volumes, basically. So individual trades can be 1,000x exaggerated. There's double counting happening with prediction market volumes. So I don't know, man. I don't know. It's just a bit weird that there's this double counting error, and that when you take a certain strike, they count the other side too. Also, I think when you buy and sell, maybe they count it as two different things, which is fine.
I mean, look, prediction markets and perps platforms are a lot more similar than meets the eye, because remember, on perps platforms, you've basically got a gigantic pile of cash and then you're trading paper contracts.
Yeah, but on perps, like if you trade $100,000, at a 10x, you trade $1 million of volume.
Notional, right?
Right, but in prediction markets, if you trade 1 cent, 5 cent, 90 cent, or 10 cents, they're all reported as $1 of volume.
Because the potential outcome for that contract is $1. I agree. That's wrong, right?
Yeah.
So
And that is what's happening.
What I'm saying is that,
and then it's $2 after you double count it, apparently, where it's like, so you can have
that would be
literally
200x. Fact, they would be wrong by a factor of 200x.
Yeah.
Because you could have a cent rounded up to $1. That's 100x wrong, and then you could double that when you double count it.
Yeah.
Yeah. I'm saying that volume is not the correct metric to measure prediction markets.
Okay.
They're a lot more similar to perps platforms, and how we measure perps platforms is open interest. And the reason is because it is effectively just a big pile of cash that you're shifting between accounts of traders. And so, you're right. You can lever up on perps. You're trading these paper contracts.
Yeah.
And if they expire correctly, then it'll go to the other person. But there's no real volume metrics here. It's just a bunch of cash that you're shifting from one trader to another. And so the right way to and all of these, look, back when Polymarket used to use an AMM, you would track this differently. You could track volume. But now that all of the prediction markets, at least Kalshi and Polymarket, are using order books, the right way to track the adoption and activity on these markets is open interest. It's a lot harder.
So you're saying that prediction market volumes are misleading?
Yes, I am.
Yeah. Okay. Interesting. And you think that's not just like a Polymarket thing, it's just a general thing?
I think it's a general thing. I think volume is the wrong metric to track this. I think because prediction markets and perps operate the same way, they have a big balance sheet of cash, and they're just shifting the cash between different accounts based on the winners and the losers. The right way to track this is the order interest that you have resting on the books.
Right.
You can't
fake
that. You can't have two order. If you have $1, you can't put $2 of orders in the books and have it sit there and have both execute.
Yeah, you can't. Yeah, exactly. And it actually shows how much people are willing to use your platform, how much they're willing to hold on the platform.
Right.
And just how much is actually being wagered.
Right. Yeah, exactly. And so that is the proper metric to track. I'd be curious to see some open interest metrics on prediction markets. If any of our on-chain sleuths are out there and they have some data sources, I'd be curious to see.
Cool. All right. I think Mike from Talus is going to join us here in just a short sec. So we will get him on, our last guest of the day. He is probably tired, fresh off of token launch. And should be good to go for a congratulatory stream, reflectionary stream, and our last guest of the day. So we're going to have Mike coming up. Mike, what's up, man? Welcome. We'll get you up in just a short sec. I know you've had a long couple days, I'm sure. Congrats on the token launch here. And Rob, AI crypto.
I love it. It's great. We're going to bring Mike up in just a moment. I think we're hearing a lot more about, there he is. There's Mike. Welcome to the show, brother. Congrats.
Thank you, guys. Thank you. It was great seeing you guys in Buenos Aires a few weeks ago, and it's been a grind since then.
Yeah, man. I feel like you haven't really slept since then.
No.
Yeah.
Especially not this last week. It's been some crazy times, but finally happy to be across the line, and good things coming.
Tell us, tell us what the last 24 hours has been like. We speak with a handful of founders that they come to market, they come to mainnet. It's always a variety of reactions. Sometimes people are ready for a break. Sometimes job's not finished. What has your last 24 hours been like?
Man, so yesterday I for the past week I've been waking up at 6 a.m. just because I opened my eyes and I feel like I have work to do, so I just got out of bed. And then yesterday I went out of bed at 6 a.m. and then I just worked until like 10 p.m. ish. Then I took like an hour and a half break, and then I worked through the whole night. And it's just
Hell
a
yeah.
mix of like operations, coordination, making sure like a lot of little details are covered. And I couldn't have done it without the amazing team that I have behind me or in my side.
Yeah. How's Ben doing?
Pretty good, man. Ben's been also pretty busy. We've been all over the place, man, this past months.
Good, man. Good. So, US token launch, building this protocol out to enable autonomous agents. Talk to us about what the US token allows you to do with your current protocol, how it helps you advance what you're trying to achieve with Talus, and kind of what that, network connection looks like between the token and the protocol.
So yeah, the Talus token is kind of like the web that brings everything together in the protocol. You could think about it as the main gas payment. So if anytime you're going to run a workflow or anytime you're going to execute an agent, you have to pay in the US token. We also have the ability to integrate different tools, and each tool will have their own like security, and the ability to do these or enabling these tools and have them be secured, you have to like stake. So ultimately, the stakers could end up receiving rewards from the tool providers that actually charge and earn revenue. So people deploy agents, the agents get usage, then this usage, translates to the different tool owners, and then the tool owners distribute to the token holders. So you get this kind of like circular economy where, the more agents, the more tools, the more usage, and all network effects.
Cool. And what was the process of having to navigate exchanges here? We've heard a lot of pushback from Binance, from a lot of protocols, as well as just the general process of launching a token change over the last several months to year. What was your experience like from a founder perspective, navigating this launch and negotiating with exchanges? I know you probably can't talk too much about it, but just kind of generally, how did that process unfold for you?
Yeah, I think the biggest or the most important thing is to kind of like map the landscape, identify which type of exchanges you're aligned with, understand like where your target markets, and then you have different types of exchanges, different regions, and so on and so forth. Then you have to like reach out, generate connections. It's kind of like this like dating game, I'd say. Similar to like you go and like fundraise capital, you have to sell your ideas, you have to sell your product. Then conversations, applications. It's really a long process, to say the least. That like takes a couple weeks. But ideally, you want to have exchanges that are aligned with you, that could make you be successful, and how the industry goes. I think the past couple weeks have been quite tricky with the market. Ever since like the October 10th, I think liquidity dried out, specifically like in the on-chain market. So it's been quite tricky. I'm not gonna lie, but I think we got over the line with like all the effort that we put in, and we're really happy with our results, at least on day one. And I think what's to come is like just making sure to get bigger like post-launch partnerships, make sure that we could get more exposure, make sure that we can bring more users, and ultimately bring the token and the product to a broader audience.
And you guys chose to launch the token on Sui, right? Could you describe that choice? Why did you guys launch on Sui? What was it about the chain that drew you in? And how much are you taking a multi-chain strategy versus focusing on the Sui ecosystem?
Yeah, very, very good question, Rob. Like, we've always been like Sui maxis. We think that the parallel execution that Sui has, high throughput, these things actually enable Talus to run the infrastructure at the scale that it needs to run. So that's why we decided to build specifically on Sui. So our tokens at Sui, we have a lot of like ecosystem support from them, which has been amazing. We also have like the Move language, which I guess you guys are familiar with. It's more secure. So there's a lot of like technical alignment on that side of things. like ecosystem alignment and tech alignment. And then, yeah, like I think down the line, yes, at some point we're going to be looking at multi-chain support for agents. I've always been the person that believes that blockchains should be looked as like a whole, and then you're going to have different opportunities in different places, so you're just going to want to have exposure to different places and make sure that you can, if you're trading on one chain and then you see an arbitrage opportunity on another, you would want to have an agent go and take advantage of those opportunities. So ultimately, yes, I think we're gonna agents are gonna be a multi-chain technology, and we plan to adapt for that down the line.
And prediction markets is also a pretty important piece of the strategy, as I understand it, because we had Ben on. He was talking about how the autonomous agents are going to compete in some prediction market contests. And so, Andy and I were just talking about prediction markets before this, and how I tend to think, they're having some issues understanding the right way to measure volume when it comes to these prediction markets. I tend to think because these are order books, open interest is the right metric. What do you think about the prediction market meta happening right now? People call it a super cycle. Is it overblown? You guys have bet quite a significant piece of your strategy and invested into this category. What's your temp check on prediction markets at this stage?
Yeah, so you said it right. Like prediction markets are a core to the first incubated application that is going to be built on Talus, which is Idle Fund, where you said agents compete against one another, and then humans can speculate on the outcomes. That is going to be the first application built on Talus, and we've been doing a lot of research. And part of this, it's like, okay, you're going to have these agents even create hundreds of markets, ideally per hour or per day, and then these markets need to have like the right liquidity. You need to make sure that they're actually efficient, and that if you're having hundreds of parties trading, that like there has to be liquidity in the market. So we've been like exploring multiple technologies to like fit this. We have some partnerships coming out in the next couple of weeks that I want to probably reserve my right to say right now. But it's really interesting how the meta has been playing out. I think just the fact that to be able to like get information from these novel type of DeFi mechanisms versus just traditional media, and how it like used to be a few years ago before like Polymarket was invented is crazy. Like we saw with the elections last year, we're seeing it with sports. Now we're seeing like different types of prediction markets, and I think that meta is going to like keep changing. And as we saw improvements on, for example, DEXs, we're going to keep seeing improvements on these new DeFi primitives for prediction. And ultimately you could think about them as like betting, but I like to think about them as more of like sourcing information, trying to make sure like that you could get the right inputs to make any type of decision.
I think you're thinking about it the right way. I mean, we had Sriram from Eigen, we had Andrea on from Story. They were on just about an hour ago, and they're talking about the rise of truly sovereign autonomous agents over the next 2 years, doing things bigger than just booking travel for us, but making consequential decisions, buying things from one another. And it only makes sense that agents are the ones to use prediction markets more so than humans, to really understand the depth of the probability of certain outcomes happening, taking certain actions as a result of these things happening. And so, if we see truly sovereign autonomous agents within 2 years, maybe it's 3 or 4 or 5 years, but it makes sense that agents will become the dominant traders of prediction markets more so than humans.
Yeah, agents are going to be everywhere. Like they're going to be the creator of markets, and then they're going to be the traders. I also like to think about like agents creating the events in a way where they communicate against one another, they compete against one another, and they ultimately create the outcomes, because it's a novel type of entertainment that we have not seen before. Like right now, every prediction market that exists, it's based on real life events, but not this virtual economy meta that we've been seeing.
And Mike, you mentioned how AI can be the originator of these markets. They can also be the trader, and we'll probably end up heading there at some point soon. But the third piece of that is the resolver of these markets. And I think when it comes to how we're really going to arbitrate truth, because ultimately people are going to think one thing is true, another set of people are going to think another thing is true. the way in which we really arrive at what is true and what is not is probably some prediction market traded by AIs. And that, however that resolves is what the AIs will believe.
Mhm. Yeah, it's what the AI will believe and what the AI will be able to achieve as well, right? Like if you have a specific competition, let's say AI is trying to figure out a cryptographic puzzle and one wins, and you could like verify it. People could speculate on that and like what agent is smarter than the other. And then if you take it to another level, which is more relatable to humans, these agents will have personalities. They'll behave like Elon Musk. They'll behave like Donald Trump. They'll behave like, Andy and Rob. And people will be able to like follow them and just get their perspectives, understand them, and just bet on their outcomes.
Mike, what's next for you guys as you come into the holidays here into Q1? Now that this milestone is behind you, what's the expected time for Idle.fun to come out? Other apps for Talus under development. What's next?
Yeah, our main focus is like keep pushing the product, making sure that it's at the right level that it needs to be to gain wider ecosystem adoption. Launching Idle.fun in Q1, making sure that we can build a solid business around it and that people actually find novel ways of like entertainment and interaction with AI. And then just like keep building ecosystem, keep building a community, striking great partnerships. We have a lot of things in line, and we're really excited to make these things happen. It's been a wild ride. I'm not gonna lie. The past like 2 years, you guys have known me since a while, and I think we're here, and we're gonna keep pushing and making sure that we execute properly.
Well, Mike, man, we know you're pretty gassed, and I'm sure you've got a ton of more things in front of you and navigating conversations. And I'm not jealous of your Telegram right now, so we'll let you go, man. Thank you for being a part of the show. Congrats on the token launch.
We're doing some special holiday awards this season, and I think you're a nomination for best chest hair. So just keep an eye out for that one.
Okay. Thank you, guys. We'll talk soon, and yeah, man, we'll stay in touch. Have a good
Sounds good.
Congrats on the launch, man.
Thank
See
you
you next
guys.
time.
Bye.
All right, Mike. Alrighty, guys. That about does it for the boys today. The best chest hair, huh?
I think it's an honorable mention.
All right, Rob. Great stream. Lots there, lots to unpack still. And I like that we had some differing market opinions today. We had some bulls, we had some bears. We had some interesting legislation just recently announced as well, actually.
Oh, let's hear about that.
I don't know, I just saw Frank tweet about it.
While you're pulling that up. I think where I'm at on the market side of things is really trying to balance time horizons, short time horizon and long time horizon, and try to balance TA and fundamentals. It feels like this is where people diverge and we get some mixed opinions. Some people tend to look at TA, other people tend to look at the fundamental catalysts. Kind of pick, one or the other, or figure out which one is more significant to look at. And then the other is time horizons, right? Are you looking at a short time horizon or a long time horizon? And so I think oftentimes it's easy to talk past one another. You and I do it. We do it with guests on the show as well. And I think it's just more effective to make sure that, we're talking about the same thing when we're talking about the market.
I hear you, buddy. Yeah. So U.S. regulator clears banks to act as crypto intermediaries in riskless transactions. Seems meaningful. Now every Wall Street bank can act as a crypto broker. So pretty cool.
I saw PNC Bank announce something with Coinbase about this, where they'll give you an interface to hold crypto.
Yeah. So the banks are coming. The institutions are here, guys.
But
Don't let
this is like Vanguard, right? This is like, centralized exchange lets you withdraw to a hot wallet. Well, if you buy something on Vanguard, you're going to want to withdraw that potentially and hold that right next to your checking and savings account.
Yeah.
So it's just building out.
They're going to put them all into one interface. I think your stocks, your tokenized equities, everything, your freaking metal notes.
Right.
Whatever it is.
This is the super the super app thesis, the
Yeah.
financial super app thesis, the
I think it's a real
neobank
thesis.
I think so too. I think this is the new barbell. This is the new mental model to understand the next crop of sustainable, successful apps in crypto. Is, you could call them Web 2.5 because, they kind of connect pretty closely with the legacy banking infrastructure. It really feels like it's a melding and this integration of two worlds.
It really is.
I think it's
bullish.
I think so too.
All right, guys. See you tomorrow. Much love. Great stream. Peace.